Stay close to College Hoops Conversation with College Basketball Talk podcast from NBC Sports. Join Rob Dowster and Bobby Reagan for weekly recaps of what's happening in every conference. Nostalgic flashbacks to classic games and big picture discussions of the future of the sport.
Always knew was a legend, and you always knew was one of the great coaches because everyone always told you how great this coach was. But he never really reached point of either.
Search College Basketball Talk on TuneIn to listen.
Ready for a one-of-a-kind look at the NFL? On the PFF NFL podcast, Steve Palazzolo and Sam Munson interpret the unique stats of Pro Football Focus to analyze the league, uncover secret superstars, and discuss which teams to watch out for in the next Super Bowl.
Let's talk some football. Let's do it, Steve. All sorts of stuff. We're going to do most improved defenses around the NFL. Solomon Wilcots, our very own. He went into some detail over at PFF.com. Most improved defenses around the NFL.
Search PFF NFL on TuneIn to listen.
How do hockey fans know what day it is? Just turn on the Locked on NHL podcast, where a rotating cast of hockey experts guide you through the week with a different theme show for every day. From big news Monday to recap Friday.
But we've got a couple of news items that are noteworthy in the NHL in the last week, one of which is below the NHL, and we'll bring that up first. So the AHL announced officially, this has been speculated for weeks and weeks, but the AHL...
Search Locked on NHL on TuneIn to listen.
Today at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Bonnie Quinn and Paul Sweeney.
The Fed action, essentially unlimited quantitative easing.
Companies taking aim at coronavirus vaccines and other treatments.
This could be a lower for longer hit.
Market sell-off glowing global once again.
Breaking market news and insight from Bloomberg experts.
It's possible that this is going to be a scarring recession.
The Fed is really showing that they're doing whatever it takes.
A lot of people don't expect that the economy will reopen in full.
This is really hitting industrial America, and it's a major crisis.
This is Bloomberg Markets with Bonnie Quinn and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from New York City and points beyond to our worldwide audience. It is a risk-off day today. We have the Dow Jones Industrials off about 380 points. Coming up, we are going to take a look at the trade war. Looks like the U.S. is weighing new tariffs on $3.1 billion of exports from France, Germany, Spain, and the U.K. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg, what do you have for us?
Well, all stocks here in the U.S. are down, and so are European stocks. In fact, they slumped the most in a week as the Trump administration considered the fresh tariffs and resurgence in virus cases around the world sharpened concern about the pace of the economic recovery. Let's take a look at the markets. S&P is down 1.4%, down 43. The Dow is down 1.5%, down 400. And the NASDAQ is on 1.1%, down 112. The 10-year is up 3/32. The yield is 0.7%. West Texas Intermediate crude is down 2.4% at $39.39 a barrel, while COMEX gold is down 0.1% at $17.8020 an ounce. The dollar yen, 106.88. The euro, $1.1265. And the British pound, $1.2463. The National Highway Traffic Safety Administration is investigating premature failures of the large central touchscreen and the computer that powers it in Tesla Model 3 sedans to determine how frequently they break down, now whether they pose a safety risk. The agency has indicated it's received 11 complaints from drivers about the issue. In the last 13 months, Tesla stock is down 2.6%. That is a Bloomberg Business Flash. Bloomberg Markets is underway with Bonnie Quinn and Paul Sweeney.
Greg Jarrett, thank you. Well, plenty of fears out there in the market. We have the IMF forecasts, more virus fears and trade fears too. And today, for once, the market is actually responding in kind. Let's get to Dave Wilson for some details. Dave.
I'll tell you, it definitely looks familiar when you go through the S&P 500. You see energy and financial stocks, the worst performers on the day, and they've been the worst performers all year, too. So, that's certainly in keeping with what we've seen over time. And today, one of the biggest differences may be that technology stocks are not kind of holding up the market quite so much. I mean, they're doing a bit better than the S&P 500 as a group. But again, you look at this year, I mean, tech is one area that's definitely been, doing well, and today it's kind of giving back some of those gains. So you're not getting the kind of support that you've seen throughout the year from that group. And you look at what's down in terms of individual stocks, and there are some very familiar names there too. Especially the airlines and the cruise lines. You've got United selling $5 billion of debt, or trying to raise that amount between bonds and loans backed by their frequent flyer program. The shares are down 6% at the moment. And you look at the biggest declines, you see the cruise line owners. Carnival, which has lost its investment grade rating from S&P as it did from Moody's. You'd think it would have happened long before now, but it's finally happened. Carnival's down more than 9%. So are Royal Caribbean and Norwegian. So it's really what we're seeing today, kind of consistent with what we've been seeing for a while here as the coronavirus has played out.
Yeah, and you mentioned tech stocks, Dave, and there's a story out about our good friends at Apple. The stock's down a little bit here after there's a report out there saying the Justice Department may be looking at the App Store, and that kind of raises the specter once again, which we had pre-pandemic, that perhaps some of these big tech names, including Apple, are getting maybe a little bit more attention from some of the U.S. regulators.
Right. Think about it. If you want to get an app onto an iPhone, you're going through the Apple Store, and so that gives them a lot of leverage in terms of being able to run that part of the business. And there are some companies out there that don't like the fact that they can take as much as 30% of the revenue generated from an app, just to be on the store. So, that's where the issue has come up. So, you've got to consider, what does that mean going forward? And how do you translate that if you're looking at Apple and you're seeing Facebook or, Alphabet, the owner of Google or whatever, you do have to wonder, to what extent is this going to become a focus again? Because if you think about what's been going on with these companies, a lot of it ties into content and how it's being handled. We got Twitter yesterday putting another advisory on one of President Trump's posts. So, that is, as much as anything, a concern. But beyond that, there's the bigger issue of how these companies do business. And so that's the sort of concern that comes front and center with this report about Apple. So when the headlines crossed, it was a Politico report, the Justice Department and a coalition of state AGs looking at launching an antitrust probe. Apple did turn around. It's down, though, less than 1%, and still the NASDAQ is the best of the three major stock indices. So you have to wonder if this would have any long-term consequences for the stock price, Dave. Obviously for consumers, it could have, and for companies it could have, but for Apple stock price, nothing seems to dent it all that much. Not really. And look, you think about these sort of antitrust issues, and to some extent, it really hasn't been the U.S. over time taking the lead. There might be more reason for concern if the European Union was going after Apple. Just, the history of these kinds of issues. It seems like that the antitrust regulators over in Europe have been a whole lot tougher than the ones in the U.S. when it comes to dealing with these sorts of concerns. Certainly the U.S. has been involved in the past. You think about, Microsoft and its browser going back historically. That said, it's one thing to have a report saying they're looking at. We've seen these reports pop up from time to time. It's a matter of, is there going to be follow through, and how does that process play out, and how long does it take? These things tend to drag on for years. Yeah, that's right. And I think people probably, look at the business models for some of these big tech companies, and, you think about the regulatory environment, Dave, and you can't really come to any doomsday scenario where they break up some of these big tech companies. It might just be, in the future, they may take a harder look at some of these consolidations and some of these acquisitions that some of these companies make. But, the worst case scenario out there of breaking up some of these companies, I think generally is discounted pretty well by the market. Right. Dave, and you're really talking about business practices here, arguably with the idea of how Apple runs the App Store and what kind of access they provide to other software developers? So, and what's the cost of that access? I mean, these are kind of different questions than, do you put together all the pieces of a business and does that shut out competition? So,
very briefly, Dave,
there's a lot to get through.
GNC Holdings filing for bankruptcy protection. The internet was full of funny memes about how Robinhood traders are going to now jump on GNC stock. Any ramifications for the market?
It's more the same in a sense. I mean, it's funny you bring that up, Vonnie, because I was looking at Hertz earlier, and it's been down 4 days in a row, and today it's up 18.5%. I mean, you're going to get this kind of volatility with companies in Chapter 11 proceedings. It's just that now you have, so this whole influx of smaller investors that are trying to profit from the volatility. That's what makes things maybe a bit different than what we've seen over time. And it may pop up with GNC as well. Who knows? But it's sort of a sideshow in terms of what's happening in the market at this point. The main issue is, what do companies look like here? And once we get second quarter results in about 3 or 4 weeks, what are they going to be able to say about their business?
Well, Dave, thank you. And you really can, answer anything thrown at you. So thank you for that. That's the one Dave on Twitter, Dave Wilson, on your Bloomberg or generally. I do want to mention a couple of headlines crossing the Bloomberg now. The U.S. Appeals Court is ordering a judge to dismiss the Flynn case. Again, the U.S. Appeals Court is ordering a judge to dismiss the Flynn case. We'll get to details of that a little bit later on. We have somebody from the SDNY, formerly a former prosecutor, he is going to be joining us a little later on, so we can get into that story a bit more, and I'm sure we'll have more for you in our world and national headlines. And in fact, that's where we turn now to our 99.1 studios in Washington, D.C. for Nathan Hager.
Yeah, we'll continue to follow the headlines as they come down, Vonnie, with the U.S. Appeals Court ordering a judge to dismiss the case against former White House National Security Advisor Michael Flynn, who, of course, pleaded guilty a couple of years ago to lying to the FBI about his contacts with Russian officials during the transition to the Trump administration. We'll have more details as they come in. In the meantime, with coronavirus cases climbing and Black Lives Matter protests shifting the national conversation, President Trump's political position is slipping. The New York Times Siena College poll gives Joe Biden a 14-point lead over the president, 50 to 36%.
The only group in which Trump is really leading right now is non-college educated white males, which of course forms a part of his base, but, isn't the kind of coalition that he's going to need to win.
That's Bloomberg Politics editor Kathleen Hunter. This poll gives Biden a 3-point lead among all men, 14 points with women, and 21% among independent voters. Republican voters bucked the president in a couple of yesterday's primaries in North Carolina. They picked 24-year-old Madison Cawthorn over a Trump-endorsed candidate for White House Chief of Staff Mark Meadows' old House seat. Cawthorn spoke with WLOS-TV after his win.
I'm so thankful that everyone has put their trust in me to be able to go to Washington, D.C. to protect and defend the Constitution and our rights. I really believe the very identity of our country is people are trying to change it.
In Kentucky, voters nominated Congressman Thomas Massie for a 6th term. And we're just getting word that the New York City Marathon has been canceled due to lingering concerns over the coronavirus in New York. The race would have celebrated its 50th anniversary in November. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Market upheavals.
The narrative is driven by uncertainty about the virus.
Political reversals.
It's not clear that some of the Republicans up on the Hill are agreed with the Republican White House.
Economic shifts.
The macro clearly being driven by the coronavirus outbreak.
Everything seems to be in motion.
Will it also mean a global recession in your view now?
But here, you're on solid ground.
Looking forward to guiding you through all of this.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
My mother was always very active and independent, and she was familiar with her neighborhood. But one day, she stopped at the stop sign for much longer than usual. She wasn't even really sure where she was at.
It's important for you to talk to someone about it. I felt so much better after my son told me, Mom, we'll figure it out.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
It's a stock market driver.
Now they're starting to see a little bit of panic from policymakers.
It's a global political force.
How will this epidemic reshape big tech and its relationship with Washington?
It's a virus.
This coronavirus is a global pandemic.
Is there a safe haven?
And the facts matter.
The situation is so bad because of the virus that is simply unavoidable.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, your best man, your worst man, you, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its Prediabetes Awareness Partners.
Economic.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
Well done, you. You finally completed that DIY. But don't stop there. A better bed makes a better you. And you've earned it. Pop into Dreams. They'll find you your perfect mattress with this clever bit of technology called Sleep Match. It takes just 3 minutes. They've introduced safe shopping measures like hand sanitizer, face masks, distance markers, and your own single-use pillow and mattress protectors. Dreams are bound to find you the perfect bed for a great night's sleep. Stay safe. Sleep well. Dreams.
You know that feeling when you get more than you expected? Like when your week off is forecast warm and sunny. Or when there's an extra unclaimed sausage left on the barbecue. Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that feeling. Nice, isn't it? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
It's not business as usual right now, but Square has tools to help your business adapt. Like Square Online Store. You can start selling online in a few easy steps with pickup, delivery, and shipping options. And if you are selling in person, you can take contactless payments with hardware like Square Reader and Square Terminal. You'll get your money the very next business day, so you can put it to work. All these Square tools work together, no matter where you're selling, and there's never hidden fees or long-term commitments. Find out how Square can help you get back to business by visiting square.com/UK. Square Up Europe Limited is regulated by the Financial Conduct Authority for the provision of payment services.
This is a message from the government. Some businesses are now able to welcome back their employees and customers. To keep everyone safe, it's important you follow government guidance and make your workplace COVID secure. Businesses should carry out COVID-19 risk assessments, put in place hygiene procedures, and help staff and customers keep a safe distance. Talk to your employees, listen to their concerns, and if possible, help them to work from home. Every workplace is different, but by following this guidance, you can get back to business safely and play your part in managing the risk of infection. Visit gov.uk/working safely for more information. Stay alert, control the virus, save lives.
At Halfords, we're here to get you where you want to be. Why not get road ready with a free car check worth £15 at all our stores and garages? With 25,000 weekly slots available at 700 locations, you can count on us to get you safely back on the road. Or even back beside the seaside. From MOTs to tyre fittings, there's no job too big or too small. Halfords, for life's journeys.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
S&P snapped a two-day advance, sinking more than 1%. Travel stocks and other companies that stand to benefit from life returning to normal fared worse. Oil's down below $40 a barrel in New York, and gold is steady. We take a look at those numbers every 15 minutes throughout the trading day. S&P is down 1.4% now, down 43. The Dow's down 1.6%, down 410. And the NASDAQ is down just over 1%, down 107. The 10-year is up to 30 seconds, the yield 0.7%. West Texas Intermediate crude's down almost 2% at $39.58 a barrel. COMEX gold's up 0.1% at $17.8360 an ounce. The dollar yen 106.87. The euro's $1.1272, and the British pound $1.2475. F45 Training Holdings, a provider of group fitness classes backed by actor Mark Wahlberg, has struck a deal to go public by merging with bank check company Crescent Acquisition. The deal, which confirmed an earlier Bloomberg News report, is slated now to value the combined companies at $845 million, including debt. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Vonnie Quinn and Paul Sweeney on Bloomberg Radio.
It's an interesting day for trade. Plenty of headlines. The US is eyeing $3.1 billion of EU and UK imports for new tariffs. Things like olives, things like airplanes. Some of them will be getting new tariffs and some of them will be seeing their tariffs upped, according to sources closer to President Donald Trump. We're also seeing Mexico's president saying he's very likely to meet with President Trump soon, and he hopes that Justin Trudeau can join the meeting. He's looking at the first 2 days of July, but that's assuming he'll travel. Let's bring in somebody who knows a lot more about this, and that is Bloomberg trade reporter Bryce Basic, joining us from Washington, D.C. Bryce, the $3.1 billion in tariffs, new tariffs and additional tariffs for the likes of France, Germany, Spain and the UK. How serious is President Trump about using that threat?
Hi, Bonnie. I'd say he's very serious. His top trade official, Robert Lighthizer, was in Congress last week, and the main message he had to lawmakers is that the U.S. is going to continue to use the tariff threat to get the best deal for Americans that they can get.
So, Bryce, you're based in Geneva now. Give us a sense of kind of how Europeans feel about trade, the sense that the state of trade between Europe broadly defined and the U.S.
Sure. Well, the Europeans are upset about U.S. tariffs on steel and aluminum, and then recently last year the U.S. put tariffs on goods like olives, wine, and cheese, and they want to hit back. They've been asking the EU Commission to target U.S. products with retaliatory tariffs, and later this year, the WTO here in Geneva is expected to award Europe the right to retaliate against certain products. Now, this is all stemming from a very old dispute between the U.S. and the EU over aircraft subsidies, but it's now playing into these broader transatlantic tensions over, taxing American digital giants and pretty much anything else across the board.
What kind of response will we get from the European Commission? I mean, these are individual countries, but obviously the EU has to stick together and respond as one.
Indeed. The Commission is keen to retaliate. Commissioner Phil Hogan mentioned earlier this month that his hand has been persuaded by Robert Lighthizer's inability to negotiate a settlement. So if and when the WTO authorizes retaliatory tariffs, I expect the EU to move forward.
What are some of the goods and services that the EU would impose tariffs on from the U.S.?
They've drawn up a list of a wide array of goods, including coal, agricultural, farm goods like cherries, nuts, tomatoes, and then fisheries, lobsters, crabs, shellfish. A lot of these goods are expertly targeted at hitting industries in states that supported Donald Trump and his Republican allies in Congress. The idea is to increase political pressure on Trump to make a deal.
I spoke to Phil Hogan a few months back, and it was quite clear that there was absolutely no give on the European side of things when it came to agriculture. Where where is there any kind of window of opportunity? Because right now it doesn't really seem like there's any way of, walking back or de-escalating this trade war that's going on between the US and Europe.
Vonnie, I think you're right. Things seem to be getting worse before they're getting better. At some point, the U.S. and the EU need to settle their disagreements if they're going to tackle some of the larger problems provoked by China and its massive subsidies and supports of industries back there. But this discussion has not been going well, and things may escalate over the summer before they can get better.
So, Bryce, is the perception in Europe that the U.S. does not want a deal, that this is just a political maneuver on the part of the Trump administration to kind of, America first type of thing?
That's somewhat correct. I mean, the experience that the Europeans have seen with the U.S. renegotiation of NAFTA and the Korean trade deal is that the U.S. will attempt to basically put a tariff gun against its allies and foes and force them to sign the dotted line of a deal that is helpful to the United States. Now, EU is a bit larger of an economic body than Canada, Mexico, and Korea, so they feel like this is a fight that's worth having. And how that winds up, we shall soon see.
Bryce Boschek, thanks so much for joining us. Bryce is a Bloomberg trade reporter based in Europe, talking about some of the rising trade escalations. Vonnie, it just seems like it's it's kind of a global situation here. The Trump administration taking a very arguably aggressive stance on trade and tariffs, and it seems like no one globally is immune from some of the tariff risks that the Trump administration likes to use.
And it's really two ideologies when you consider it. It's the turning inwards of certain countries and the resistance to that of blocs like the European Union. And of course, the coronavirus is impacting everything. Now we have Mexico's president saying he'll travel to the US in early July, but will he really be able to? And certainly extending the invitation to Prime Minister Justin Trudeau, well, that's not going to go anywhere, because it would very much surprise me if Trudeau travelled to the United States early next month.
Yeah, exactly right. So just looking at the markets, these trade issues certainly having an impact on the market here. We have the S&P off about 1.3%, the Dow off 1.4%, the NASDAQ off just under 1% here. So trade weighing on the markets here somewhat. We'll have more coming up. This is Bloomberg.
This is a Bloomberg Money Minute. Stocks are slumping this morning, snapping 2 days of gains. A resurgence in virus cases around the world, sharpening concerns about the pace of the economic recovery. The Dow falling more than 400 points. Carnival lost its investment-grade status after S&P Global Ratings downgraded the company. S&P said Carnival's credit metrics are likely to remain very weak through at least next year. Moody's cut the cruise operator to junk last month. Vitamin seller GNC has filed for Chapter 11 bankruptcy protection. The health and wellness company plans to sell itself and close as many as 1,200 of its 5,200 stores. It's been struggling with the big debt load. And Ford has a lot riding on the overhauled F-150 pickup it's unveiling this week. Ford said the almost 900,000 pickups sold last year generated about $42 billion in revenue. That ranks near Apple's iPhone among the biggest American consumer products. Courtney Donahoe, Bloomberg Radio.
Imagine being fired because of who you love. Imagine being denied medical treatment because of who you marry. Imagine being evicted because of who you are. Millions of Americans don't have to imagine this. They have to live it. Because in 31 states, it's legal to discriminate against LGBT people. Get the facts at beyondido.org. Brought to you by the Gill Foundation and the Ad Council.
At Bloomberg, we know a lot of financial experts.
He's a former president of the European Central Bank.
Your Global Financial Warriors is a classic textbook.
A lot of political experts.
If you were advising the President of the United States, what's the thing that he's not doing that he should do?
And lucky for you, we know a lot of science experts, too.
You talked about those reagents which are necessary for the testing.
It's also the behavioral psychological approach.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. This July.
Decisions. Clearing. Isn't it great?
So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Wednesday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
In line with government guidelines, face coverings are now compulsory on public transport. At Asda, you can get a 4-pack of Prima disposable face coverings for £2.80, or a 2-pack of washable face coverings from £2.50. Asda, we're all in this together. Selected stores subject to availability.
I was offered one.
I was offered one. Were you?
Yeah, I was offered one too.
1 2 1 2. I was offered one.
I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
At Honda, we believe in our ears. Listening can help solve some of life's biggest conundrums. For example, if a car breaks down and there's no one around to hear it, does it make a sound? The answer is yes. The new Jazz Hybrid will pinpoint your location automatically and send for help at the tap of a button. And with its personal assistant, you can find the answers to other conundrums like, where is a good vegan gluten-free pizza place with free parking? The new Honda Jazz. Hybrid and connected. Honda, the power of dreams. Connectivity subscription available in selected grades.
If you want to find out what the best smart tech is to keep an eye on your front door whilst you're out on your lunchtime run, you could ask a robot, or someone called Robert, or Raj, or Fiona, or one of our other tech experts on Shop Live, Curry's PC World's online video call experience.
Hey, you're chatting to Colette here on Shop Live.
Isn't it nice to get advice from another human being? They're just a click away. Curry's PC World. Start the conversation now with Shop Live.
It could be a first-timer or a long-timer or a once-in-a-whiler. It could be a little or a lot. It could be the ticket under your fridge magnet. It could be someone with your first name and last and middle. It could be you. Tonight's Lotto jackpot is over £12 million and it must be won. Or thousands of you will win a share of the jackpot. Play online or on the app. Lotto from the National Lottery. Your numbers make amazing happen. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
This half hour, we're talking to John Alters about the great rotation from growth to value that hasn't come yet. We'll also be speaking to TCW Group's Tad Rivell on fixed income. First, let's get a Bloomberg Business Flash now from Greg Jarrett.
Stocks are down, Vonnie, coming off a second straight record close for the NASDAQ. Investors are concerned about the rising rate of coronavirus cases in many states and also trade tensions that seem to be heating up between the United States and Europe. We check the numbers every 15 minutes throughout the trading day. S&P is down 1.3%, down 40. The Dow is down 1.4%, down 370. And the NASDAQ is down 0.9%, down 94. The 10-year is up 1/32. The yield is 0.7%. West Texas Intermediate's down 3.1% at 39.08 a barrel. COMEX Gold's down 0.1% at 17.8020 an ounce. The dollar yen 106.93. The euro's $1.1270, and the British pound $1.2464. The International Monetary Fund has downgraded its outlook for the coronavirus-ravaged world economy, projecting a significantly deeper recession and slower recovery than it had anticipated just 2 months ago. The fund says now it expects global gross domestic product to shrink 4.9% this year. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It is 10:33 on Wall Street. Time for Bloomberg Opinion. We welcome Bloomberg Opinion columnist John Author, senior editor for Bloomberg Markets. John, thanks so much for joining us here. I know you have a column out here talking about value stocks, and perhaps people have been waiting for value stocks to come into vogue, and maybe this pandemic would alter some investor behavior. We might get a chance for these value stocks to move. We're just not seeing it, are we?
No. What's interesting is that we have had one very significant head fake. I mean, generally, value stocks have done very much worse than growth stocks during the crisis. That's partly because a lot of banks show up as value stocks, but there is more to it than that. But we did see a recovery in value as of about a month ago, which was very positive in that it implied that there was now a genuine belief in a broader recovery that was going to help everybody, that would make people get that much more excited by the bargains. And it's been squelched. Growth stocks are at an all-time high again. Value stocks are declining in absolute terms again. So it is like Charlie Brown and the football. Value has been lagging ever since the last crisis in 2008. There have often been moments when it looks as though value is about to return, and often, always, they have been disappointed for now 11 years.
They're such an interesting bunch, really, John, because the problem with value is that until you have that great rotation, your trades are really not paying off for you, and you have to just wait and wait and wait.
Yeah.
And if you mistime it, or if you can't wait long enough, then what happens to you is like something that happened to Julian Robertson back in 2000, where he, liquidated and then suddenly missed the great rotation. So how do they manage? How do they stay going?
Well, usually you don't have quite the same kind of. If we're going back to the Ben Graham era, you're not used to having quite this degree of continued powerful growth for the market as a whole, which makes life that much harder. It's also a relatively new phenomenon that you have institutional fund managers who are judged relative to their peers, not just in absolute terms. So when value is lagging, that's a problem. I think the final issue compared to value as it's traditionally been practiced is that the original notion of value was that it had a margin of safety, i.e. It was so cheap that even if the worst happened, you'd still be okay. Very, very few companies these days satisfy that requirement. A lot of what are known as value stocks these days are heavily levered stocks, where if the worst came to the worst, they would indeed go bust. So being a value manager, particularly as value is now understood, is a much harder job. You're right. You need far more patience than you did before, and that you can easily see is why more people are inclined to give up on it.
So, John, not only is value underperforming, but when you take a look at where the performance is in the market, a lot of market watchers are saying it's just not a healthy market in the sense that if you take a look at the S&P performance, it's really been driven by a handful of tech names that we all know, the Apples and Amazons of the world. How much of a concern is that to you as you look at just kind of the breadth of the market?
It's a very great concern. If there was true confidence in a global recovery, and there is certainly much more confidence than there was back in March, but if there was true confidence, then you would see much more of a rising of all boats. And generally speaking, you're not seeing that. There is still a sense that you have to cling on to the FANG stocks, Facebook, Amazon and the rest for dear life, because they're the only ones that are going to deliver for you. And that is worrying. In general, some kind of a recovery taking hold, you should expect value to start doing well. That's when growth is common, so you don't need to, it isn't scarce, you don't need to pay up for it. And being a bargain becomes much more exciting to you. So the fact that value continues not to excite is worrying. One other point I suppose we do need to make that banks show up as value stocks. And in a very similar way to tech, there was a brief period when banks were beginning to show some signs of regaining more a few weeks ago. That's also gone into reverse. And again, there are the markets, capital markets are driving things more than banks in many ways these days. But in general, you need healthy, strong banks for a strong and consistent rebound. And when a narrow market like this, in which value stocks and banks are doing badly, isn't that.
It's really an excellent column, John, posing several questions, and you add in a little bit of politics towards the end, so I would urge everybody to go and read it. John Author is a senior editor for Bloomberg Markets, and of course Bloomberg Opinion contributor. The great value rebound was another head fake. For the short term, he says, it's not good to feel like Charlie Brown staring up at the sky, but it's also worrying that investors are still not finding many opportunities outside the few dazzling big companies that dominate modern life. And of course, we know them because we all use them, Paul.
Yeah, absolutely. And it's interesting. The tech names are just, they power the market up. When the market comes down, they're also the leaders on the way down. They're just dominating kind of market trading right now.
The question is, will there be a turning point this time? I guess there usually is. Okay, let's get some world and national news now. We'll head to 99.1 Studios in Washington, D.C. and Nathan Hager.
Bonnie, we're seeing new highs in coronavirus case counts. Florida just reported a 5.3% increase from the day before. That is the most of the pandemic. Hospitalizations in the Sunshine State are up 256. That's the most in a month. Texas, California, and Arizona have also seen surges in COVID-19. Andy Peckosh with the Johns Hopkins Bloomberg School of Public Health tells Bloomberg Daybreak the next 2 weeks will be key in trying to slow down the spread.
Interventions that need to be put back in place need to happen relatively quickly to try to, again, stem some of this increase in cases.
According to Axios, a survey from the data firm Civic Science finds nearly 2 in 3 American adults would support closing economies again rather than risking infection. Secretary of State Mike Pompeo says the U.S. is working with the European Union on safely reopening travel during the pandemic.
It's important for the United States to get Europeans the capacity to travel back to the United States. It's important, very important for the Europeans to fully reconnect with the American economy as well. I think leaders all across those two places understand the importance of this.
Pompeo spoke as the State Department released its annual report on terrorism. The EU is reportedly considering restrictions on Americans re-entering as it reopens its borders next month. A federal appeals court has ordered a judge to immediately dismiss the criminal case against President Trump's first national security advisor, Michael Flynn. A 3-judge panel denied U.S. District Judge Emmett Sullivan the authority to investigate whether the government's surprise motion to dismiss the case was part of a corrupt effort to aid one of the president's political allies. Flynn pleaded guilty twice to lying to the FBI. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's BABBEL.com.
COVID-19.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Wednesday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
What if the world listened more? Maybe it could become a better place. Because when we really listen, we start to notice things that don't sound quite right. They might not seem obvious at first, but listen closely and they stand out like a sore plum. And the more we listen, the more we learn. Our ears help us find belter solutions. And things can change from this to something a little more like this. The new Honda Jazz is a hybrid. Honda, the power of dreams.
From all of us at Thames Water, thank you for supporting our key workers. As the weather warms up, demand for our water is growing, so we need your help more than ever. From taking shorter showers to turning off your sprinklers, you can make every drop count, inside and outside your home, to keep taps flowing in your community. Just don't forget to keep washing your hands regularly in line with government advice. Be an H2O hero. Find out how at thameswater.co.uk/watersmart.
The wait is over. Tonight, it's Liverpool v Crystal Palace in a cracking fixture. And with Now TV, you can watch all the action live for just $9.99. Hold on, they're checking with VAR.
That's confirmed, it's $9.99.
Unbelievable stuff. So, grab a Now TV Sky Sports Day Pass. Search Now TV Sports. 18 plus, content streamed via internet. Full terms apply.
Stay close to College Hoops Conversation with College Basketball Talk podcast from NBC Sports. Join Rob Dowster and Bobby Reagan for weekly recaps of what's happening in every conference. Nostalgic flashbacks to classic games. And big picture discussions of the future of the sport.
Always knew was a legend, and you always knew was one of the great coaches because everyone always told you how great this coach was. But he never really reached point of either.
Search College Basketball Talk on TuneIn to listen. We're all guilty of spending too much time on social media. Why not add something genuinely useful to your feed with TuneIn? Follow at TuneIn on Facebook, Twitter, and Instagram to learn about some of the best stuff happening around the app. You might just discover your next audio obsession. To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Indoor gatherings, wash your hands and don't touch your face. Stay at least 6 feet from people you don't live with. Wear a mask. Don't share food, toys, or other items, and avoid shared surfaces. Open windows for better ventilation. Try to avoid gathering indoors as much as possible. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
U.S. stocks are down the most for the past 2 weeks as the Trump administration is considering fresh tariffs and a resurgence in virus cases around the world, sharpened concern about the pace of any economic recovery. We check the markets every 15 minutes. The S&P is now down 1 3/4%, down 55. Another leg down for the Dow, down nearly 2%, down 508. And the NASDAQ is down 1.3%, down 135. The 10-year is up 5/30 seconds. The yield is 0.69%. West Texas Intermediate is down 3.8% at 38.85 a barrel, while COMEX Gold's up 0.3% at 17.8660 an ounce. The dollar yen 106.95. The euro $1.1267. And the British pound $1.2440. American Airlines pilots are calling on the U.S. government to pay for enough jetliner seats to enable social distancing during the pandemic, saying the move would help support carriers through the worst collapse in industry history. That is a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Paul Sweeney and Vonnie Quinn on Bloomberg Radio.
Well, companies have been borrowing absolutely ad nauseum since that difficulty arose in March that we like to refer to as the pandemic, but of course it was around for much longer than that. Companies now, though, tapping the bond markets maybe at a pace that's moderating amid rising credit risk. Because why? Well, the coronavirus seems to be surging again around the world. Let's bring in somebody who knows a lot about fixed income, also covers high yield, and of course everything else from here to Europe, where we're seeing a 100-year bond today being sold by Austria. Tad Ravel is CIO for fixed income at TCW, $212 billion firm-wide under management. Tad, just summarize what you think is going on in fixed income markets these days. We have yields attaching themselves to ranges and not moving, and yet so much activity.
Yes, well, we've gone through Alice in Bondland the last couple of months, right? We are experiencing, from the perspective of fundamentals, some of the worst fundamentals that the U.S. economy, the global economy, has ever seen. And yet we have gone over the course of 2 months, basically, from what might have been actually semi-rational levels in fixed income in terms of credit spreads in March, where spreads were out in IG and investment grade out to 350 basis points over treasuries, to where we are today, wherein we have almost completely repriced where we were back in January of this year. The fundamentals obviously don't look even remotely like where we were in January, when we were experiencing 3.5% unemployment, and the idea that we would have a global economic depression would have been viewed as insane type of comments. So where are we? I think where we are basically is we are in a market that is utterly supported by the central banks, most particularly by the Fed, and they're not supported by fundamentals. And as you alluded to, we have had a record pace of borrowing on the part of corporate America, more than $1 trillion year to date in investment grade. So what is you're supposed to take away from this? This is the deleveraging that was supposed to happen at the end of the cycle that is actually taking on the character of a re-leveraging. So I think it's a case of the can is getting kicked way down the road, and the issues and the problems and the leverage that had built for years as we went into the late cycle, they're still with us.
So, Tad, given that the fundamentals are not there to necessarily support some of these risky assets, does this end badly from your perspective?
I'm not really sure that there's any other way for it to end but badly. I mean, it's interesting. I mean, I'm a fixed income person, so I should probably not ever comment on the equity market. We never understand it. But it is rather instructive to recognize that those four stocks that everybody likes to talk about, the FANGs, are up anywhere from, let's say, 15% to as much as 50% year to date in the case of Amazon. Four stocks appear to be supporting the vast bulk of the equity market. I mean, again, maybe I'm not an expert on this, but it certainly strikes me that with the S&P down about 5% with the move this morning, that you have a very narrow base actually to build upon. And perspective from Bondland would continue this way. Somewhere, depending upon 8 to 12% of the mortgages out there, depending upon which kind of mortgage you're looking at, but home mortgages, of course, are in some state of forbearance. How many of these ultimately get worked through adversely, we don't know. There's complete opacity, I think, as it relates to the economic fundamentals. And if you cast your eye into the commercial mortgage world and you look at if you pull a typical CMBS commercial mortgage-backed deal off the shelf and then look under the hood, you'll see that about 40% of the loans are retail-oriented or lodging hotel-oriented. The idea that we're going to see a rebound and a retracement and a reperformance of these loans back to where we were 6 months ago is, I think it strains credulity to the breaking point.
So will there be losses? Is that what you're saying?
Yes, there are going to be losses, but the policy response in a way has destroyed information. You don't actually know which loans are good or bad. I mean, I'm not speaking against the policy response because I think that once the leverage got to these levels and once we got ourselves into a state of vulnerability and then the pandemic occurred, I'm not sure that there was any other response, but nonetheless, one of the adverse consequences from a capital markets perspective with respect to the policy response is you don't know what loans are good or bad. You don't know what businesses are going to make it through. And part of that process is also piling on additional leverage onto the balance sheets. In fact, Bank of America, I believe, recently put out a research piece in which, I mean, it's their best guess, of course, but that leverage ratios, debt to EBITDA ratios, are probably going to be rising by at least a full turn in the investment grade universe. That's very strange. At the end of the cycle is exactly when corporations are supposed to be getting their house in order, deleveraging, and essentially adapting themselves to new realities. So is it supposed to end badly? Yeah, because unless you restore economic growth back to some semblance of normality, you don't know where you are. Maybe I'm rambling a little bit. Where's unemployment? Where is it going to settle down? Is it going to settle down at the end of the pandemic at 10%, at 15%, 20%? Right? Or is it going to go back to 3%? I'll say no.
Tad, as you look across your portfolio, give us a sense of kind of credit quality now and kind of how you think that might trend.
Well, there was a great opportunity. There was the greatest opportunity in many years to add credit exposure in March, and we took, I think, pretty full advantage of it. That basically there was the way we talked about it internally is that we're going to do credit committee meetings that last no more than 90 seconds, is what we said. If we have to discuss a credit in March for more than 90 seconds, if it takes that much analysis, we probably don't want to be involved. And so the names that we did get involved in would include things like Exxon and Intel and Procter & Gamble, some of the money center banks, and Disney. And buying those issues, they were coming new issue. Not only were they coming cheap, they were coming with new issue concessions.
I want to hear one of those pitches. Do we have 90 seconds left, Paul?
Exactly.
We might have to wait till the next time because I don't think we have fully 90 seconds.
All right. Fair enough.
Tad, thanks so much for joining us. We appreciate it. As always, love to get your take on the markets. You've been cautious, continue to be cautious. Tad Revell, Chief Investment Officer for Fixed Income at TCW. The big folks out on the West Coast, over $200 billion in assets under management. They know what they're doing out there. They see every deal that comes across the tape. And so we always love talking to Tad because he gives us a great perspective on it.
The elevator issue pitch.
Yes.
I mean, come on, 90 seconds. That's true. If you can't sell something in 90 seconds, don't try and sell it, right?
Yeah, exactly. And, the real issue, there were some opportunities, as Tad was saying. They were trying to be pretty aggressive there back in March when there was some real dislocation in the market and they had some capital try and put some money to work. So we'll see here. But again, this is a market, as we've talked about a lot, Vonnie, that's really, really been supported, maybe even backstopped by the U.S. Federal Reserve and other central banks around the world. And the question is, will that be enough? And what happens when that support starts to be pulled back? We'll have it. This is Bloomberg.
At the start of
My name is Danya. I moved to Manchester in 2010. I came from Afghanistan. The first school day was a bit tough. I had no friends, couldn't speak English, and felt a bit left out. My high school teacher was very supportive. She matched me up with friends that spoke the same language as me. Having friends gave me a lot of confidence. I felt like I'm not being left out.
Teaching. Every lesson shapes a life. Get free one-to-one support with our teacher training advisors to get one step closer to the classroom. Subject to eligibility. Search Get Into Teaching.
At Honda, we believe in our ears. Listening can help solve some of life's biggest conundrums. For example, if a car breaks down and there's no one around to hear it, does it make a sound? The answer is yes. The new Jazz Hybrid will pinpoint your location automatically and send for help at the tap of a button. And with its personal assistant, you can find the answers to other conundrums like, where is a good vegan gluten-free pizza place with free parking? The new Honda Jazz. Hybrid and connected. Honda. The power of dreams. Connectivity subscription available in selected grades.
Get your cook on with Asda. With rollbacks on Hellman's Real Mayonnaise, 705 grams was £2.75, now £2. And a 6-pack of Warburton Sandwich Thins was £1, now 75p. Wham bam, add your lunchtime ham. Find thousands of rollbacks across our stores. Asda. Selected stores and lines subject to availability. Offers end 1st of July.
We've got a lot of catching up to do.
Hi there, everybody. Lovely to be with you again.
Over 100 live games in just 6 weeks on Sky Sports. With 64 Premier League and 45 EFL Championship games, everything is still to play for. Scores to sell, relegation to avoid, Europe up for grabs, and the titles to win. Upgrade to Sky Sports today. Requires Sky Sports Premier League and football packs. See sky.com/sports for details.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
World 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Bonnie Quinn and Paul Sweeney.
How do you kind of view the volatility in the marketplace here?
The harshest downturn for American workers in history.
Companies across the board, across industries, really trying to shore up their balance sheets.
There's very, very disturbing dynamics at work.
Breaking market news and insight from Bloomberg experts.
There's only so much that you can speed up vaccine development.
Because of all the dislocations, there's always relative value trades that you could be doing.
This could be a U-shaped recession rather than a V-shaped recession. It's the uncertainty, I think, that is really spooking everyone.
This is Bloomberg Markets with Bonnie Quinn and Paul Sweeney on Bloomberg Radio.
Great hour coming up for you. We're going to be speaking in just a little bit with Ethan Powell and Marvin Owen, Senior Director at the NAACP, to discuss a particular effort to invest in companies working on social and racial equality through a minority empowerment ETF. That will be a fascinating conversation. And later on, fraud prosecutor for the U.S. Attorney's Office at the SDNY, formerly Ken Nwade, will join us to discuss all of the DOJ headlines. First now, let us get to Greg Jarrett for a Bloomberg Business Flash.
Well, Bonnie, stocks take a nose down as pockets of coronavirus infections surge in several states, adding to concerns about a second wave of cases that could lead to renewed restrictions on business activity and therefore slow any economic recovery. Let's take a look at the numbers. S&P is down 1.8%, down 57. The Dow's down nearly 2%, now down 504. And the NASDAQ is down 1.4%, down 140. The 10-year is up 5/30 seconds with a yield of 0.69%. West Texas Intermediate crude is now down 5% at $38.37 a barrel, while COMEX gold is up 0.3% at $17.8780 an ounce. The dollar yen is at 106.90. The euro is $1.12.75. and the British pound $1.2446. Hertz could flip its roughly 150,000 car inventory as it looks to stay afloat after filing for bankruptcy last month. Jefferies analysts are saying that used car firms like CarMax and AutoNation could be among those eyeing Hertz in bankruptcy amid a rise in demand for used cars. That's a Bloomberg Business Flash. Bloomberg Markets continues now. Vonnie Quinn and Paul Sweeney.
All right. Thank you so much to Greg Jarrett there joining us for our Bloomberg Business Flash. Now it is time to have a look at how small caps are faring. Typically, pretty close performance all round in this market. What's the story today? Let's bring in Dave Wilson. Dave.
Typical of what we've seen this year with smaller companies trailing larger ones, Vonnie. That's where we are today. The Russell 2000 index down 2.6%. And the S&P 500 lower by 1.8%. The Russell's steepest drop belongs to GNC Holdings, whose ticker is indeed GNC. The vitamin seller has fallen 31% to about 56 cents a share after filing for Chapter 11 bankruptcy. BioSig Technologies, ticker BSGN, M as in Mary, has declined more than 20.5%. The medical device maker raised $17.5 million in a direct share sale to institutions. The sale amounted to about an 8% stake. And Renewable Energy Group, ticker REGI, has slid almost 17.5%. The biofuel maker now expects a second quarter loss before interest, taxes, depreciation, and amortization, rather than profit they had predicted earlier. The Russell's biggest gain belongs to a stock Greg Jarrett just mentioned, Hertz Global Holdings, ticker HTZ, up more than 70%. It's all about the possibility that they may end up selling their used cars, perhaps to CarMax or AutoNation. Jefferies had some reference to that in a report out today. And Translate Bio, ticker TBIO, is up 16%. The vaccine developer is higher for a second day after expanding a deal to work with France's Sanofi. Translate Bio rose yesterday by 47%.
That as always. Right now, I'm looking at Dell Technologies. The stock is up 7% today. Some speculation out there that the company may be considering spinning off its VMware business. To get a sense of kind of where we are on the deal space for Dell Technologies, we welcome Anand Srinivasan, Senior Technology Analyst for Bloomberg Intelligence. So Anand, I know you followed Dell for a long time. You know this deal with VMware when it occurred several years ago. What do you think Dell's thinking about right now?
Yeah, this is a constant tribulation with Dell and VMware. Go private, go public, spin this off, buy that in, load debt, not load debt. Look, the fundamental issue with Dell, I think the frustration comes out of the fact that they are being continually valued as a potentially even subpar technology hardware company. And they have 80% exposure to this unbelievable software franchise, which people are not giving them credit for. So they're continuously toying with the idea of, okay, how do I spin this off efficiently? Is the spin off the right way? Is an outright sale the right way? Should I buy it back instead? And so all of those options are again back on the table. But the bottom line is, VMware is roughly a 65-ish billion franchise of which Dell owns 80%. So if you were to somehow monetize that $50 billion asset, and Dell's market cap yesterday was in the mid-30s, so you can substantially enrich your own investors and potentially unlock the value from a sum of the parts basis. And so this is an idea that's back on the table. It's not new. It has substantial value from an equity valuation unlocking standpoint. But whether it actually goes through with it or not is totally up to Michael Dell and company.
Anand, correct me if I'm wrong, but when these two got together, Dell and VMware, was it not considered potentially a genius move on the part of Michael Dell?
It was. It was. I remember when EMC first bought VMware. This was one of the genius acquisitions, and it was done very, very quickly. Diane Green, who was the founder of VMware, fantastic executive. So the value proposition at that time was, I've got this server franchise. I have this storage franchise, and then I have this infrastructure software franchise that could potentially sell pieces of one or the other bundled with it. And then this became too big, it grew too fast, so they effectively monetized that separately, yet holding on to a big piece of it. So now they're trying to offload it completely so that you can pay a substantial dividend to your shareholders. So how these pieces fit into the overall puzzle, every 3 years it seems to shift. And also another big factor is just the fact that Dell has an enormous amount of debt, specifically about 58.5 billion. And this could go, the unlocking of the VMware franchise could go a long way in helping reduce its debt load, which it has committed to doing.
So, Anand, why do you think Dell is not getting the credit for its VMware stake? That seems, numbers you were just suggesting earlier, such a huge disconnect.
Yeah, it is. It is. I mean, part of the problem is that VMware is a standalone trading entity. So even though only 20% of its ownership is in public hands, its valuation is being set there. Yet at the same time, from an accounting standards perspective, it's being rolled into Dell. So it's absolutely stark in that one piece is not being valued. So if you're not going to get the value for it, and all you do is you get the economic benefit of passing through from an accounting perspective, the revenue and earnings, why not just spin it off to your shareholders and have them hold on to two pieces of stock, and that way Dell will be potentially more fairly valued as a hardware company and completely unlocked. And I think that's exactly why they're trying to go through this route.
Interesting. Anand Srinivasan, thanks so much for joining us. Anand covers all things technology for Bloomberg Intelligence. He's been covering the tech space for a long time, and he's been obviously all over the Dell story, the VMware story, the combined story, the potential to spin it out so as Dell looks to, perhaps get a better valuation, a better monetization of this VMware business, perhaps the speculation ramping up once again that they perhaps may sell them. Again, looking at Dell Technologies here, the stock's up about 6.7% today. It's up about 2% year to date. Right now, let's head down to Washington, D.C. for world and national headlines with Nathan Hager. Nathan.
All the nation's coronavirus hotspots keep getting hotter. Florida has reported its biggest one-day increase in COVID-19 cases ever. Another 5,508, up 5.3% from the day before, compared to the previous 7-day average of 3.7%. Hospitalizations are up 1.9%. That's the most in a month. And the state's rate of positive COVID-19 tests jumped from 10.8 to 15.9%. All this comes after similar surges in California, Arizona, and Texas. Dr. Mark Boom is CEO of Houston Methodist Hospitals. He says this surge is frustrating because people know what they need to do to contain the coronavirus.
Somewhere around Memorial Day, people just sort of sighed a breath of relief and said, hey, it's summer. I'm going to act like it's summer, and I'm going to act like this thing never was here. And I think we're really paying the price for that now.
Between the coronavirus response and racial protests over the last month, Joe Biden has opened up his biggest lead of the campaign over President Trump. A New York Times Siena College poll puts Biden 14 points ahead of the president, 50 to 36%.
I think there's a sense in the White House, and this poll underscores it, that if the election were held today, Trump would be in a lot of trouble. The reality, though, is that the election isn't going to be held today.
But Bloomberg's Kathleen Hunter reports this poll puts Biden ahead across most demographics, except for registered Republicans and white, non-college educated voters. The president does get a 50% approval rating when it comes to his handling of the economy, but this poll gives him low marks when it comes to his handling of criminal justice, the coronavirus, and race relations. Global news, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Coronavirus proved that every aspect of our lives, from business to health, is connected to Asia.
Healthcare firms testing the appetite for IPOs in Hong Kong too.
But you already knew that.
COVID-19 certainly had an impact on this.
Bloomberg Daybreak Asia, tonight at 6 Eastern.
What does that mean for Asia if the dollar remains on the back foot for the foreseeable future?
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Hope you enjoyed your meal. And I just want to say, he's lucky to have a brother like you.
Lucky? Caring for my brother is far from easy. But he's a part of me, like my arms and legs, so I'll be his. No time for tired. Nothing can disable this love. He needs me, but I'm the lucky one, even though I need help now and then.
If you're caring for a loved one, visit aarp.org/caregiving for care guides and community. Support for your strength. Brought to you by AARP and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
To buy your home, you became a house hunting ace, learned about loans, scoured neighborhoods, and asked the right questions. Now you're queen of your castle. If you manage that, you can get your retirement plan on track. Visiting aceyourretirement.org can help. With 401k tips and smart saving strategies, you'll feel empowered to own your retirement like you own your home. Go to aceyourretirement.org. Because when it comes to clearing financial hurdles, you're an ace. Brought to you by AARP and the Ad Council.
The best of Bloomberg.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
And action.
I was offered one.
Cut. That's not on the script.
I was offered one. Get in.
Ladies and gentlemen, I was offered one.
Come, boy. I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
The Mini Electric was raring to go. Until, ready, set, stop. We hit the power down switch. We waited. But now, it's time to start up again. We're ready with the Mini Electric and whole Mini range online. Showroom safety measures are set, and we're feeling good to go. Find your perfect Mini at mini.co.uk.
Tuesdays at KFC gonna get you like, wow, pow, chow, kapow, get down right now. If you know how, then take a bow, because this deal's gonna raise a brow. Get 9 pieces of original recipe chicken for an eye-popping $5.99. What the... Every Tuesday at KFC. Participating restaurants ends 18th of August 2020. Tuesdays only, subject to availability, not available online.
It could be a first-timer or a long-timer or a once-in-a-whiler. It could be a little or a lot. It could be the ticket under your fridge magnet. It could be someone with your first name and last and middle. It could be you. Tonight's Lotto jackpot is over £12 million, and it must be won. Or thousands of you will win a share of the jackpot. Play online or on the app. Lotto from the National Lottery. Your numbers make amazing happen. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
You always say the best thing you ever did was join up. I bet you don't get the same experiences in Civvy Street, especially the expats. And that feeling of pride. Lots of people are rejoining now. It's easy, and we'd love to have you back. Go on, feel the pride again. Search RAF Rejoiners.
When the world stopped, people in our local communities didn't.
At the Co-op, we want to say thank you to all the local heroes. Daksha wanted to help the NHS, so she and her husband Parish cooked 50 meals for a hospital in Harrow. But they didn't stop there. They've set up the Community Response Kitchen, delivering to hospitals, schools and homeless shelters across London. Now they're delivering between 1,000 and 3,000 meals every day. And they've achieved all this with no funding, just the support of local businesses and local people. To Daksha and Paresh and all the local heroes that keep our communities going, the Co-op says thank you.
From all of us at Thames Water, thank you for supporting our key workers. As the weather warms up, demand for our water is growing, so we need your help more than ever. From taking shorter showers to turning off your sprinklers, you can make every drop count, inside and outside your home, to keep taps flowing in your community. Just don't forget to keep washing your hands regularly in line with government advice. Be an H2O hero. Find out how at thameswater.co.uk/watersmart.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks are down so far the most for the past couple of weeks. This after the Trump administration considered fresh tariffs and a resurgence in virus cases around the world sharpened concern about any pace of an economic recovery. We check the markets every 15 minutes throughout the trading day. S&P's now down 2.3%, down 73. The Dow takes another leg down 2.5%, down 640. NASDAQ is down 2.1%, down 209. The 10-year is up 730 seconds. The yield is 0.68%. West Texas Intermediate crude is now down 5.3% at 38.22 a barrel. Crude inventories have been pushed to a record high, and that led the price of oil to spiral in New York. An Energy Information Administration report indicated domestic oil inventories increased to just over 540 million barrels last week. That's why it is down 5.25% now. COMEX gold is up 0.25%, is 17.8610 an ounce. The dollar yen 106.98. The euro $1.1261, and the British pound $1.2426. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Vonnie Quinn and Paul Sweeney on Bloomberg Radio.
Now, latent questions for corporate America have come up very strongly in recent weeks on race in the United States, but it's not a new conversation for many, for most, I would suggest. One group of people that have been looking at this is a group of people that have already come up with something called the Impact Shares NAACP Minority Empowerment ETF. It's a fund designed to provide exposures to companies with strong racial and ethnic diversity policies in place. Let's welcome now two of the men who created and are helping to market this. Ethan Powell is CEO of Impact Shares, and Marvin Owens Jr. is Senior Director of Economic Development at the NAACP. Welcome, gentlemen, and it is great to have you. The ticker for the ETF is NACP, for those who'd like to look it up. My question to you is, right now it's a small fund, but Impact Shares is a non-profit ETF issuer. How do you plan, let's go to you first, Ethan, on marketing this? I would imagine that in recent weeks it may have become easier.
No, you're right. There are 600 ESG funds in the United States, and this is the only one that's specifically addressing issues of corporate America and how they interact with communities of color. So I think, to your point, it's getting a lot of attention. The volume on the secondary market has increased, and we have seen some inflows. I think, one of the things that we need to appreciate is that traditional asset managers really have a credibility and a communication problem as it relates to ESG. And that's why we partner with leading social advocacy groups to craft issue-specific ESG solutions. And we ask, what does a good corporate citizen look like through the lens of the NAACP, specifically as it relates to people of color in the United States? And we work with them and the corporate America to improve their business practices relative to these issues.
Marvin, I want to bring you in here. I mean, we all saw the tremendous events, the civil unrest as a result of the death of George Floyd. To me, at least, just as an individual, it feels different this time. The conversation feels different this time than in past episodes. The folks at the NAACP, do they feel the same way?
Yeah, we do. Though we've been at this for 111 years, this does feel like a watershed moment in which corporations and individuals are thinking about how to get engaged with the fight against racial injustice and against discrimination. And I think this fund has given us an opportunity to engage corporate America in this conversation in a different way. For probably 25 years or more, the NAACP has been doing corporate scorecards, and the scorecard model is essentially what is being used in this ETF, and that's why we think it's a wonderful tool for engagement. We need everyone involved, and this is a way to get everybody involved.
Marvin, there are 175 holdings in the ETF, and I'm curious about companies such as Amazon. It has the highest net percentage, Microsoft and Apple right behind Amazon. Are they doing the best on diversity?
No, they're not doing the best on diversity. I think what that indicates is simply the fact that they've really committed the resources to trying to develop and trying to measure what they're doing. And I think that, quite frankly, is a result of their size again and again. And I think they're focused on wanting to make sure that they're creating a diverse and equitable corporate culture. And I think that's a great thing to celebrate. But I also think that it's important to recognize that these organizations have put the money and resources toward this effort. There are other organizations, other corporations that are also doing great work. And so, yeah, while they are represented in our fund in a significant way, they are not the best in class, I would say.
So, Ethan, as you look at some of the companies...
They are the best in class within their individual sector, right? So we have every sector of the economy represented, and we pick the leaders within each sector. So while the tech sector certainly has room to grow, those names in particular are taking a leadership position.
Yeah, so Ethan, I want to get a sense from you kind of what are some of the characteristics or what are of companies that are doing a good job, right? Were they just early? Did they have commitment from the board? What are some of the characteristics of companies that score well on your screen?
Right. So we look for supplier diversity programs, fair hiring, pay, and promotion practices, community engagement programs, digital divide programs. And as Marvin said, it does have a larger cap skew because those are the companies that have the resources not only to commit to the programs, but to prioritize reporting to the public as well.
Now, yesterday we saw BlackRock come out and say it plans to increase its black workforce by 30% by 2024. You have other companies making similar pledges. Marvin, is 30% of the workforce enough? And by 2024 even, not even immediately?
I don't think it's enough. I do think that it's a wonderful effort. I think it's the right time to do it. But you have to raise the question about why is it happening in this moment? If this was a priority, then it should have been a part of the corporate culture prior to this moment. And that's why I think it's important to engage these corporations and these institutions in these kinds of conversations. It's great that they're making the commitment, and it's great that they're sort of implementing these kinds of changes. It does suggest to us that there's a lot more work to be done because in this moment there was a decision to do it, and it was a decision to do it based on the current events that were happening. What was happening prior to this moment is important to also recognize. And so that's why it's important that BlackRock is making the commitment publicly, and we're excited to hear that they're doing it.
Gentlemen, thank you so much for this important conversation. Ethan Powell, CEO, Impact Shares, based in Dallas, Texas, and Marvin Owens, Jr., Senior Director of Economic Development for the NAACP, based in Washington, D.C., talking about the ETF. NACP is the symbol, focusing on companies that score well in the ESG realm, paying particular focus to diversity, and certainly a topic on the front burner these days. This is Bloomberg.
This is a Bloomberg Money Minute. Virus cases are rebounding, and that's putting pressure on stocks. Trade tensions also hurting sentiment, with the Dow falling more than 550 points. The U.S. is weighing new tariffs on $3.1 billion of exports from France, Germany, Spain, and the U.K. The U.S. wants to impose new tariffs on European exports like olives, beer, gin, and trucks. Applications for loans to purchase homes fell slightly, ending a streak of increases that lasted 9 weeks. The Mortgage Bankers Association Purchasing Index slipped 3% last week. T-Mobile is seeking relief from a commitment to create 1,000 full-time jobs in California. It said the COVID-19 crisis makes the mandate infeasible. T-Mobile made the promise to win approval of its acquisition of Sprint. And the world is on track for a radical overhaul of the restaurant industry. Consulting firm Aaron Allen and Associates estimates that 10% of them will disappear in the wake of the pandemic. Courtney Dunhope, Bloomberg Radio.
Hi, everyone. Al Roker here. As a guy with his own catchphrase, I appreciate that after 75 years, Smokey's only said,
"Only you can prevent wildfires."
But I'm filling in because there's a lot more to report. Like when it's dry or windy. Be careful burning, because wildfires can even start in your neck of the woods. Go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at Bloomberg.com/professional.
How long?
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Wednesday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
And action!
I was offered one.
Cut. That's not on the script.
I was offered one. Get you.
Ladies and gentlemen, I was offered one.
Come, boy. I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
At Honda, we've never looked to other car companies for inspiration. No, it's not a matter of an inflated ego. We just prefer listening to what people really need. For example, the new Honda Jazz Hybrid doesn't have the expected 6 airbags. It has 10, including one that prevents the driver and passenger from colliding with each other. And because we also listen to our conscience, all our safety features come as standard. No charge. Honda, the power of dreams.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything from current events to untold stories from the golden era of sports.
Neil. You know that, right? I tried to tip dunk all the free throw line one time.
Search Knuckleheads on TuneIn to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Indoor gatherings, wash your hands and don't touch your face. Stay at least 6 feet from people you don't live with. Wear a mask. Don't share food, toys, or other items, and avoid shared surfaces. Open windows for better ventilation. Try to avoid gathering indoors as much as possible. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Stay tuned. We're going to be speaking with Can Nawade, former corruption and fraud prosecutor for the U.S. Attorney's Office at the SDNY. Plenty to talk about in terms of DOJ decisions this week and last week. Let's first now get a Bloomberg Business Flash with Greg Jarrett.
Selling spree in stocks is accelerating, Bonnie. Virus news seems to be getting worse and worse. Florida's cases, for example, are up 5.3% compared with the 7-day average of 3.7%. Oil's taking a hit, too, as traders weigh the impact of a further spread on demand, with national inventory showing builds for raw crude as well as refined products. The dollar, gold, and treasuries are all catching bids. Let's take a look at the numbers as we have a tendency to do. S&P 500 is down 2.3%, down 73. The Dow's down 2.4%, down 627. The Nasdaq's down nearly 2%, down nearly 200. The 10-year is up 6/32, the yield 0.69%. West Texas Intermediate crude oil is down 5.3% at $38.21 a barrel. COMEX gold is down 0.1%, $17.80.10 per ounce. The dollar yen 106.91, the euro's $1.12.71, and the British pound $1.24.26. You may have trouble finding employees in New York. City employees, that is. New York's mayor says the city is considering 22,000 layoffs of city employees to cut $1 billion of expenses after lockdown-related revenue losses. That is a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Paul Sweeney and Vonnie Quinn on Bloomberg Radio.
Well, one of the negative byproducts of the pandemic has been higher food costs. We had some supply chain issues. We had certain meat and poultry processing plants shutting down due to the virus. But the concern is that maybe food prices will remain at these higher levels even as some of these issues get resolved. To discuss this, we welcome Stu Leonard Jr. He's a chief executive officer of Stu Leonard's. He's on the phone from Danbury, Connecticut. Stu, thanks so much for joining us here. We saw that initial spike up in food prices at the supermarket level. Should we expect those prices to come down as supply chain issues get resolved?
Well, first of all, good to be with you this morning, Paul and Bonnie. How are you? You know what? I've been in the business 50 years. You know, we have a family business here in New York, New Jersey, and Connecticut. And I have never seen such a volatile food market as we've seen since the pandemic hit. You've seen all sorts of our big processing plants across the country close down. And, you know, whenever there is a shortage of supply, prices always go up. What we're noticing at Stu Leonard's, and we buy direct right from the local farms and local meat companies and so forth. What we have seen, and I just talked to all our buyers this morning with meat, fish, produce, cheese, fish, we're starting to see the prices coming down. And I'm reading the newspaper, and I'm saying our prices aren't going up at Stu Leonard's. You know, we've even lowered the price on ground beef, from Memorial Day, $1 a pound. And it might even decrease a little bit more in the future as the processing plants in the Midwest stabilize a little bit.
What's demand been like, Stu? Because people haven't been able to just, pop out to the store to buy something last minute in many cases. And also there have been so many reports about, infections at plants. Has it put people off things like ground beef?
You know, it hasn't. It's a rock star item at Stu Leonard's. You know, you grind it fresh, and what could be better than a hamburger? I mean, it's part of America. Just about, put a little cheese on it too, and you're all set. But we have seen that a lot of our suppliers will be going through normal variations. It happened last year. It's happened every year I've been in business. You know, if the lobsters are shedding up off the coast of Maine and they're not out there catching lobsters, the lobster price will be a little high at this time of the year. But it comes down again. So there's a market-driven roller coaster that most people are used to every year with eggs, butter, all the fresh commodities. And, we're going to ride those. I don't know, maybe people are picking items that might be on a natural high right now. But, at Stu Leonard's, I don't see our prices going up. I actually see them going down a little bit in the month of July.
So, Stu, one of the things I'm fascinated about as we take a look at some of the issues surrounding this pandemic is how consumer behavior may change going forward as a result of this pandemic. What is your sense for people, kind of eating out versus, shopping at supermarkets and staying home and making maybe, more elaborate and better meals? Do you have a sense that things are going to change from your perspective?
Hey, that's a great question, because you know what? We've found now people are cooking at home, they're baking at home. We started carrying items that we never used to carry. We're mainly fresh foods, but we've added yeast to the menu, and there are lots of flour we've been selling. People are baking banana bread, and things they never used to do, and they're cooking at home and looking for new recipes. We've seen the fish department grow in size because people are starting to experiment with different kinds of foods. So I think post a pandemic, you're going to see a lot more people that are interested in food, and I will say also wine. Our wine sales have gone way up, and even cocktails. We can't keep tequila in the store just about. These margarita mixes are flying off the shelves, and the little cocktails in a bottle now are really popular. And we just put an item in now, which is like, those little pop frozen sticks that you used to eat as a kid.
Yep.
Made your lips all blue. Now they have them, but there's alcohol in them.
Now we're talking.
This is not an endorsement, by the way, on our part, Paul.
No, I know that. But they're very low alcohol. It's like a little more than beer, just about. But we're starting to see all sorts of items. We put a 5-pound bag of French fries in the store. You never would have thought that sells, but they're gobbling them up. More also toward immunity-fighting foods right now, because, look, with the cold and the flu, everybody says eat more citrus. So we've noticed our lemon sales have gone up 7-fold. Same with limes, oranges, grapefruit. All the citrus is really popular. Orange juice right now. So you're seeing a real change in the way people are eating and shopping. And the big question we have at Stu Leonard's is, where's this going to settle out?
Right.
Yeah, exactly. Stu, not to make light of it all, but thank you so much for jumping on and talking to us. A very difficult time for you guys in terms of trying to figure out what to price, and where to change prices, how often to change prices, and so on. A headline just crossing the Bloomberg, though, it might actually be good news for local grocery stores. We'll see about that in a moment. Our thanks to Stu Leonard Jr., CEO of Stu Leonard's. Now, for that headline and more, let's get to our 99.1 studios in Washington, D.C. and Nathan Hager.
Vonnie, New York, New Jersey, and Connecticut are now going to require visitors from virus hotspots to quarantine for 14 days to avoid a resurgence in cases in the tri-state area. This announcement is a reversal from March, when Texas and Florida ordered quarantines from the Northeast states where COVID-19 was surging. Now, those states are on the mend, while Arizona, California, and Texas all set records for new cases. Florida just reported its biggest one-day jump in COVID-19 cases ever today. In Texas, the city of Houston says its intensive care units are at 97% capacity, and Arizona just reported its biggest one-day fatality jump of 79. All this comes as House Democrats push a bill to strengthen the Affordable Care Act. House Speaker Nancy Pelosi says the Patient Protection and Affordable Care Enhancement Act will get to the House floor Monday as the Trump administration mounts a new legal challenge to Obamacare.
The Supreme Court will hear the brief from the Trump administration as to taking down the Affordable Care Act, right in the heart of the time of the pandemic. It was wrong any time. Now it's beyond stupid.
A federal appeals panel has ordered a judge to immediately dismiss the criminal case against former National Security Advisor Michael Flynn. In a 2-1 decision, the judges ruled that U.S. District Judge Emmett Sullivan doesn't have the authority to investigate the Justice Department's motives for dropping the case. Flynn had pleaded guilty twice to lying to the FBI. Global news, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Are you interested in a challenging...
My name is Danya. I moved to Manchester in 2010. I came from Afghanistan. The first school day was a bit tough. I had no friends, couldn't speak English, and felt a bit left out. My high school teacher was very supportive. She matched me up with friends that spoke the same language as me. Having friends gave me a lot of confidence. I felt like I'm not being left out.
Teaching. Every lesson shapes a life. Get free one-to-one support with our teacher training advisors to get one step closer to the classroom. Subject to eligibility. Search Get Into Teaching.
Listen. That's a dream. Everyone has them, jingling away in the back of our minds. And most of the time, that's where dreams stay. So easy to ignore. Anything can drown them out, and everything does. But at Honda, we listen to our dreams. We get right up close. And on really good days, they become reality. From 2022, Honda's mainstream cars will only be hybrid or electric. Honda, the power of dreams.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
First, we're told that masks don't work. Then, we're told to wear them all the time. One week, we hear that the mortality rate is 2%. The next, well, who knows? In the time of COVID-19, there is so much uncertainty, and so much scientists are learning in real time, along with the rest of the world. So it's hard to know what you can be sure of and what's still a big question mark. Enter Podcast 19 from 538, where we'll explore the evidence behind the science in our fight against coronavirus. I'm science journalist Anna Rothschild. Each week, I'll investigate coronavirus mysteries, keep track of the latest developments on vaccines and treatments. Oh, and I'll try to edit out all the times I shush my family since I'm recording this thing from the chaos of my home.
Search Podcast 19 to listen today.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything from current events to untold stories from the golden era of sports.
O'Neal. You know that, right? I tried to tip dunk all the free throw line one time.
Search Knuckleheads on TuneIn to listen.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
Ready to talk brass tacks on what's happening in Major League Baseball? Turn to the Effectively Wild podcast from Fangraphs for daily statistics, analysis, and commentary.
One team will say, yeah, we're going to keep paying minor leaguers their stipend, and another team will say, we're going to extend the stipend through this month, and then another team will say, nope, we're cutting them off, so are extending it at least through August, which would basically be the end of the minor league regular season.
Search Effectively Wild on TuneIn to listen.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks are down the most in 2 weeks as the Trump administration considers fresh tariffs and a resurgence in virus cases around the world sharpen concern about the pace of the economic recovery. Just got word that ICU beds in Houston are almost full. Texas itself is having more difficulties. Yields on treasuries fell and the dollar is stronger. We take a look at those numbers every 15 minutes throughout the trading day. The S&P is down 2.9%, down 91. The Dow is down over 3% now, down 804. And the NASDAQ is down 2.6%, down 265. The 10-year is up 8/30 seconds. The yield is 0.68%. West Texas Intermediate crude oil is down 7.25% at $37.44 a barrel, with COMEX gold down 0.3% at $17.76 even per ounce. The dollar yen 106.80. The euro is $1.1269. The British pound $1.2429. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Paul Sweeney and Bonnie Quinn on Bloomberg Radio.
And Bloomberg Markets is brought to you by Commonwealth Financial Network. For the sixth straight time, J.D. Power ranks Commonwealth number one in independent advisor satisfaction among financial investment firms. Visit commonwealth.com to learn more. Now, plenty of stories about political interference at the Department of Justice. We have former Roger Stone prosecutor Aaron Zielinski testifying on Capitol Hill again today at noon. He's been telling lawmakers the DOJ gave favourable treatment to Roger Stone. We also had, of course, that massive clash between AG Barr and the former Manhattan chief federal prosecutor, which played out Friday night and over the weekend. And just earlier, we had a 3-judge appellate panel deciding to deny a U.S. district judge the authority to examine whether the government's surprise motion to dismiss the Michael Flynn case was part of a corrupt effort to aid one of Trump's political allies. In other words, another win for President Donald Trump. To speak to all of these stories, let's bring in Can Nawadeh, former corruption and fraud prosecutor for the U.S. Attorney's Office in the Southern District of New York. He's now partner at Venable LLP. Can, thanks for joining. Let's begin with the decision today, which is a win for President Trump, and it's basically the dismissal of the case against former National Security Advisor Michael Flynn. Now, the decision may be appealed, but is it going to be considered a win for President Trump? Is this going to be the end of this?
In all likelihood, it will be the end. This is a win for the administration, and there's a possibility that this can go on bank, which means all the district court judges will review this decision, but that would take a majority of the judges to actually want to do that. So I think it's unlikely. It's possible, but to answer your question, this might very likely be it, and Flynn is done.
All right, Ken, let's go back to your home turf, the Southern District of New York. Give us your interpretation of what happened Friday night.
What happened was, it's been said, unprecedented. It was embarrassing for everyone involved and frankly terrible. It shouldn't have happened. It's rare that a U.S. attorney is dismissed when they've been doing a great job, and to have it be done that way is terrible for everyone involved. And that's my reaction to it. And it puts a cloud on what DOJ does as an institution. It smacks of something very suspicious and nefarious.
How does the relationship now improve between the DOJ and, offices such as the SDNY, the federal prosecuting offices around the country on various matters? If there's no trust between the two, or if there's some sort of a suspicion hanging over any relationship, how does anything get done?
It's hard for the work to get done. You're absolutely right, Bonnie. It's very hard. And it doesn't seem to me that this is the end of the story necessarily between the Southern District of New York and DOJ and AG Barr and that tension, because Barr did not get what he ultimately wanted, which was someone from the outside, at least on an interim basis, to be in charge of the Southern District of New York. Barr lost that fight. He could very well lick his wounds and then come back again and try to replace Audrey Strauss, who was Berman's and is Berman's deputy and is now the acting U.S. Attorney of the Southern District of New York.
So what do we know?
Will continue.
Right. So, Ken, what can you tell us about Audrey Strauss? How independent is she? Do you expect her to continue some of the investigations that do touch upon the Trump organization and president himself?
Absolutely. She will. She'll do it with independence. She was Berman's right-hand person. She has a razor-sharp legal intellect, and she cannot be corrupted. And what's interesting is she was the one overseeing many of the Trump-related investigations and prosecutions at the Southern District of New York, and it wasn't Berman anyway, because Berman was conflicted. So I'd expect those investigations to proceed at a fast clip.
Now, so much of the work is done by the rank and file, right? So you obviously have the people at the top that are directing and responsible for everything, but so many rank and file workers are just beehiving every day on so many different cases. How much turnover has there been since this administration took control? And, roughly what would happen if the president were to be re-elected? I mean, would there be more of an influx of, administration sympathetic people to the SDNY, or will it still remain sort of similar to the way it is now?
I think the turnover has slowed down since the administration came in back in 2016, early 2017. I think morale generally at the U.S. Attorney's offices and DOJ is pretty low, because it's not good to have the credibility of the institution affected in this way. It affects how, as a line prosecutor, you do your job. If people think that certain people get a better deal because of who they know, it's not good. You can't do your job. You're supposed to be trusted, and the bench stops trusting you. The courts and the judges stop trusting you, and that's just bad.
So, Ken, I mean, the key thing it would seem for the president, as you suggested, and for Attorney General Barr, would be to get one of their people in there heading the Southern District of New York. Do you think that will happen at some point?
It's a political question. I don't know if politically Barr can do that right now, because he had his ham-handed way of trying to do it, and it was found out that he lied about Berman resigning. It turns out, at least as it's been reported, that he lied to the District of New Jersey U.S. Attorney as well about that.
Right.
But procedurally, I think it is possible. I think it's possible he can do it in the manner that Berman actually was appointed as U.S. Attorney originally. Berman was appointed by Barr on an interim basis by statute. Barr can do that again.
Okay.
It's never been done before, and the the legality of doing a successive interim appointment is up in the air. But my question is, if he did do it, who'd have standing to challenge it anyway?
Yeah, exactly. Hey, Ken, thanks so much for joining us today, giving us your thoughts on a lot of these legal issues happening, crossing the tape. Ken Nowadays, partner at Venable LLP. He was formerly 9 years at the Southern District of New York, giving us his thoughts there. We have a risk-off day today. Balance of Power, David Weston, coming up. For my colleague and co-host, Vonnie Quinn, I'm Paul Sweeney, and this is Bloomberg.
In addition to Bloomberg Radio, you can catch the latest news and biggest newsmakers on Bloomberg Television. Look for us on DirecTV Channel 353 or check your local listings. Interconnect here.
Listen, that's a dream. Everyone has them, jingling away in the back of our minds. And most of the time, that's where dreams stay. So easy to ignore. Anything can drown them out, and everything does. But at Honda, we listen to our dreams. We get right up close. And on really good days, they become reality. From 2022, Honda's mainstream cars will only be hybrid or electric. Honda, the power of dreams.
If you want to find out what the best smart tech is to keep an eye on your front door whilst you're out on your lunchtime run, you could ask a robot, or someone called Robert, or Luth, or Ange, or one of our other tech experts on Shop Live, Curry's PC World's online video call experience.
Hi, you're talking to Colette on Shop Live.
Isn't it nice to get advice from another human being? They're just a click away. Go online to Shop Live at Curry's PC World.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From New York to our TV and radio audiences worldwide, this is Balance of Power, where the world of politics meets the world of business. I'm David Weston. We're going to start with the markets this morning because they are having a tough go of it, I think it's fair to say. Abigail Doolittle is here. We thought at the beginning of the day, Abigail, at least I did, that it was a tariff issue, a trade issue. Turns out there's a little problem with the COVID-19 virus.
That's probably the bigger worry that we're seeing here really weighing on markets at this point. Reality catching up to investors and traders who have had this real go-go outlook. Frothy markets, of course, the NASDAQ 100 yesterday hitting an all-time high. Today, not so much. We have a pretty decent sell-off. The S&P 500 and the NASDAQ both down more than 2.5%. Probably a case of too far, too fast. Because, of course, David, we've had this big disconnect between economic data, virus fears, and stocks simply climbing higher and higher on the Fed. But today, that's not happening. We also have crude oil selling off sharply. So that shows the degree of the concern around what could happen to the economy if the virus continues to spread here in the U.S., these spikes, these hot spots, and all of it being pressured, of course, by that Bloomberg dollar index. It doesn't feel like a huge haven bid there, that dollar, but the fact that you do have the dollar higher, that, of course, can create a sense of risk off for those risk assets, and that's certainly what we're seeing. So a little bit of a catch-up to the reality. Investors not climbing that wall of worry today, but falling off of it to some degree, David.
Yeah, Abigail, and of course we had the numbers out of Florida, which were really alarming, and there's really an uptick there. And then we had New York and New Jersey and Connecticut say, you know what, if you're coming from a virus hotspot, you got to go into quarantine if you come here, which has got to be raising questions about this recovery, how fast we'll come back, whether there may be some fits and jerks. At the same time, if it isn't the dollar, are there other safe havens? Are people going into bonds? Are they going into gold?
We are seeing a bit of a bid at this point for bonds. Earlier, not so much. So that is an interesting point because earlier, not quite as risk off, even though stocks were lower. Now at the lows, a decent bid for bonds. The yen's not being bid up, so that's sort of interesting. Gold is being to some degree bid up. And you're right. In terms of these headlines that we're seeing, psychologically, it does not help because it has felt to many for so long, for the last couple of weeks, even the last 2 to 3 months, too good to be true that you have this Fed liquidity going into the system, really saving the system to some degree. And the fact that it's diverging from some of the economic data, the sense of what people are seeing in the real world. And now with these virus hotspots, you were just mentioning Florida, the fact that New York, New Jersey, and Connecticut could require that quarantine for 14 days, really not helping. I just read that Houston's ICU beds, they are to the limit. All of this has been in the tell, though, David. Over the last 2 weeks, the S&P 500 down about 5%. Sort of on a stealth basis because it hasn't felt that way. The NASDAQ 100 just yesterday hitting a record high. But over the last 2 weeks, stocks down about 5%, while haven bonds and the yen have been rallying. So when you see that sort of a divergence between haven assets and risk assets, you know something is up. And today we're seeing that in spades, the stocks really selling off. The worst day in 2 weeks, because let's not forget, just 2 weeks ago we had that 6% sell-off for the S&P 500. Volatility breeds volatility. Probably more to come, David, on all of this uncertainty.
And that means somebody someplace is making some money. What's going on with positioning right now? Where people short the market? Are there some people actually cashing in on some of the shorts?
Well, looking more at the options market, David, which is something that I look at pretty closely each day, a lot of people are getting caught by surprise by this move. Well, two different pools of investors. From a long-term perspective, something called the skew index that's created of long-term puts or bearish bets on the S&P 500 around a sell-off. That has actually been rising, and that's been a very good tell in terms of big sell-offs, including the one that we saw in February. So that's been rising. But the put-to-call ratio relative to the near term, it has been at complacent lows. So those investors are a bit surprised by this degree of risk-off, whereas those longer-term bearish bets, they're positioned further out. But there is a sense also around the VIX curve that there could be some sort of a correction later this year. So today's volatility may be a bit of a tell on more of a correction to come. As we were chatting yesterday, David, right now, this period, especially yesterday when stocks were up with some of this virus data, it reminded me of February when you had the virus raging in February, but stocks here in the U.S. not really paying attention to the fact that in China you had that situation, the economic slowdown. Similar situation here, reconnection of the reality and what's happening for the financial markets.
Okay, Abigail, thank you very much for that report on the markets. They are moving, so we'll keep an eye on that throughout this hour. In the meantime, as I said, we came in this morning thinking it was going to all be about trade, as the U.S. now is proposing $3.1 billion of imports from the EU for new tariffs. That's in retaliation for some subsidies to Airbus, and there may be some coming back reciprocally on some U.S. exports as well. We welcome now Michael McKee. He's our Chief Economics and Policy Correspondent. So, Mike, this was not entirely unexpected. This has been on the works for a while with WTO, but what does it say about the U.S.-EU trade relation right now?
Well, the U.S. and EU are on a very slippery slope, David, headed, it looks like, for a trade war, just what the global economy needs, a transatlantic trade war now. Back in October, the World Trade Organization gave the U.S. the right to impose $7.5 billion worth of tariffs on European Union states that contributed to what were deemed illegal subsidies for Airbus. The U.S. only put on about half of those tariffs. They were on things like wines and cheeses and Scotch whiskey. Now, the U.S. Trade Representative wants to use the rest of the tariff money and impose additional tariffs. The first round of tariffs were 15% on aircraft parts, 25% on everything else. These could be as high as 100% on machinery, trucks, and again, some gourmet food items, including British gin. Even though the UK's left the EU, they're part of this tariff. The EU, meanwhile, is waiting for a ruling from the WTO, expected any time now, that would give them the right to impose tariffs on the United States for illegally subsidizing Boeing. The EU says it should be about $11.5 billion. The U.S. says maybe $300 million, a wide difference there. But the EU has made it clear that if the U.S. is going to go ahead and tariff them, they will tariff us, David.
Yeah, in the meantime, if we need any more bad news, the IMF came up with some revised projections, and they revised them down for the world, down for the United States, down for various countries today. Give us a sense of what the IMF is now looking at, and why did they have to change their projections?
A much deeper recession, David, for the world and for most of its countries because the COVID virus is hanging around longer and it has done more economic damage, they say. And here's the important point out of this whole report before I give you some quick numbers. The IMF says that the markets have not priced this in. The markets are too optimistic about how fast the world and the United States are going to recover. The fund says now they expect global GDP to shrink 4.9% this year. Back in April, they thought it would be only 3%. In the U.S., GDP expected to contract 8%. That's a change from the 5.9% they thought in April. The euro area going to shrink 10.2% in 2020. China, one of the few countries that will grow only 1%. Their growth rate was much faster and a lot of stimulus coming from them. So they think China will post a little bit of growth this year. All countries return to growth next year, except they will not make up the difference. They're going to lose a lot more this year than they'll get back in 2021.
So, Mike, I want to pick up on that point that you made about the IMF really saying that they think that the markets have gotten ahead of the economy, and when it gets reconciled, it's going to be the markets coming down to the economy more than the economy going up to the markets. They also seem to say that if that happens the way they think it may, that would really tighten financial conditions. That's something we don't need right now.
Absolutely, and given the fact that central banks are all at zero pretty much or in negative territory around the world, and QE is already in place, there isn't going to be a whole lot that they can do to loosen those financial conditions. There'll have to be some sort of stimulus that would go into the markets to try to boost the financial conditions indexes, but at this point, it would be a tough sell for some of these central banks, a tough road for some of these central banks to get something done. So it is all, at the moment, bad news. No surprise that the markets are selling off today.
Well, and particularly, specifically with the Fed, essentially, Jay Powell has said whatever it takes, the way Mario Draghi did a few years ago, and has really backed it up. I mean, if the Fed has said whatever it takes, that's sort of it, isn't it? It said we have an open checkbook. If that, and if we still have financial conditions tightened under those circumstances, what does the Fed have left to do?
Well, that's a question I've put to some Fed officials who don't have a lot of good answers at this point, because when they talk about their toolbox, what they're talking about is ways to keep interest rates from rising. They've already gone to zero. They don't want them to go up, so they can do forward guidance, or they could do yield curve control, they can do QE, but that just keeps the status quo. Additional stimulus, that's going to be harder to come by unless they use QE the way they did coming out of the great financial crisis, where they buy in the safe areas to try to drive prices down and push people to take more risk into, say, equities. And the question there is, with the valuations we have in the markets now, would they be risking blowing up a big bubble if they did that?
Okay, thank you so much to Mike McKee. He's our Chief Economics and Policy Correspondent. Coming up here on Balance of Power, we're going to talk about going from protests to voting. How could the economic inequality we have in this country really affect the voting come November? We're going to be joined by Rashad Robinson of Color of Change. That's coming up next on Balance of Power on Bloomberg Television and on radio.
It's the people with experience who make the difference.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Wednesday afternoon by the scruff of the neck. Take this sunshine as an omen and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks plunged more than 3% as investors have grown anxious. The resurgence in virus cases in multiple states will hamper the economic recovery. Yields on treasuries fell and the dollar is stronger. All 11 sectors of the S&P went down at least 1.8%, with banks and industrials down almost 3.5%. Data showed Florida set another daily record, and Houston said its intensive care beds are 97% capacity. Let's check the numbers. S&P is now down 2.75%, down 86. Dow's down 2.8%, down 733, and the Nasdaq's down 2.6%, down 260. The 10-year is up 8.30 seconds. The yield 0.68%. West Texas Intermediate's down 5.8% at 38.03 a barrel. COMEX Gold is down 0.5% at 17.7260 an ounce. The dollar yen 106.89. The euro $1.1268. The pound $1.2431. That is a Bloomberg Business Flash. Now more of Bloomberg Radio on Bloomberg.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We've had economic inequality, great economic inequality in this country for many, many years. But we've seen really graphically the results. First, in the disproportionate effect of the COVID-19 pandemic on our black and brown communities, and then in the aftermath of the killing of George Floyd and the protests that ensued. So the question now is, what can be done about it? We turn now to somebody who's been addressing these issues, trying to address these issues for many years. He's Rashad Robinson of Color of Change. So, Mr. Robinson, thank you for being here. First of all, help me a little bit. For people who are more privileged, who haven't really experienced the great economic inequality in this country, what can we learn about this to really help make a difference? What don't we understand that we should?
I think oftentimes what we don't understand is that far too often we talk about inequality as it's unfortunate, almost like it's a car accident, like it sort of just happened, rather than it's unjust. And so as a result of talking about it as unfortunate, we have all these ideas that it sort of kind of naturally occurs, and that there's sort of nothing we can do, or that we can put forth charitable solutions to the problems. We can help people get coats in the wintertime. We can do things like send water bottles to Flint instead of actually dealing with the structural reasons of why a city, because of the ways in which we have created a tax status that has taken money off the books, made cities have to go on austerity, and as a result, really attacked our sort of public resources and public goods. As sort of an example, ends up with a situation that's not unfortunate, but unjust. And so I think for a lot of folks who are sort of kind of hear about economic inequality, maybe want to do something, maybe put a little bit of money into those sort of charitable pots around the holidays and wonder why things are not changing, it's because you actually can't change these problems without changing the rules. Because it's not unfortunate, it's not a car accident, it is actually a result of a whole set of choices we have made at the policy level that have gotten us into this situation.
And Mr. Robinson, can we get from protests in the street to voting? Because certainly we hear reports of some, particularly younger members of the African-American community, who say, look, it is the system, as you just said, and voting only feeds into the system. We need to do something more fundamental than vote and start changing who's in office. What do you say to those people?
I think that it's a mix of both, right? I mean, sometimes folks tell black folks just vote when we're out protesting, but black people are the protagonists in the American story of voting. No group of people in America have fought harder to be able to actually access the ballot, have gone up against more barriers. Even yesterday in Kentucky, the sort of images and stories of people begging on the doors, waiting on incredibly long lines as polling places were closed. And so folks have voted. But I think a really good example that we can sort of look at is over the last several years, as the movements around police accountability and the movements around criminal justice reform have moved from protest to the ballot in terms of electing reform-minded district attorneys around the country. And those reform-minded district attorneys going into office with mandates that were at the intersection of criminal justice and economic justice. So, for instance, reducing the size of jails, which is sort of not just good for our tax base, but deals a blow to things like money bail, which is a sort of way in which poor communities are fleeced by the criminal justice system, whereas you're better off being guilty and rich than innocent and poor, because folks are 70% of people who are behind bars in jails are not there because they have been convicted of anything. They're there because if they're too poor to pay for their freedom. And so we have all of these sort of issues that people actually have taken to the ballot. I think the pushback people here is that when folks are told to simply vote, as if voting alone will solve all the problems, when young people, young black people in particular, in 2012, outpaced all other young voters in terms of turning out for Barack Obama, and still saw all the sort of barriers and pushbacks towards their towards the sort of goals that we had for our casting our vote. And so I say that voting is a piece of that puzzle. And what also has to happen is there has to be accountability. When I talk to many of the presidential candidates on the Democratic side, as they sort of reached out and had conversations with us, one of the things I asked them about wasn't just the what, in terms of all the policies and proposals they were putting in their black agenda, but the how. Not just, what they cared about, but how they were going to get us there. What were the entrenched forces they were going to push back on to actually get those things in place? So if you say that you want to create more wealth generation in black communities, what have been the barriers to those things, and how are you going to push back against the lobbyists, push back against the corporate forces that have stood in the way of that type of generation? If you're going to create a new tax sort of status, ensuring that wealthy folks pay their fair share, how are you going to get there?
Exactly the right question, it seems to me, is, okay, how are you actually going to change the place rather than talk about changing the place? But are you hearing that from any candidates, either from Donald Trump, the Republican, or from Joe Biden, the presumptive nominee on their side? Are they coming up with specific plans about changing the system to address economic inequality?
Donald Trump has talked about sort of draining the swamp, and we've seen the sort of swamp show up in the most swampiest ways, with all sorts of sort of ways in which corporations have been able to enter the back door and gain all sorts of access. On the Democratic side, we're still sort of pushing Biden and pushing the Democrats around what is their agenda going to be as it relates to corporate power and holding corporations accountable. We are starting to see some real sort of things with coming out for things like debt-free college education, coming out with sort of an economic agenda that will sort of look at how do we deal with home ownership, how do we deal with access to capital. Those things are quite encouraging, right? Since 1980, basically, the white and black wealth gap has constantly expanded. And there's no amount of sort of like individual work a person can do to overcome those systemic barriers. Even while we may have more black millionaires and billionaires than ever before, we see the sort of income inequality continue to expand. We see the sort of home ownership gaps continue to expand. And those are all related to rules. I mean, one clear example of how this plays itself out is in the second version of the CARES Act that came out during the sort of during our post-corona era, where the sort of loans to small businesses all went through big banks, all went from the Small Business Administration information through the big banks. And then what ended up happening was they didn't get to the ground in Black and brown communities, where many of those communities, many of folks who are running small businesses are not banking at the big banks, don't have relationships with the big banks, especially since 2008, during all the sort of banking crisis and the ways in which Black communities were targeted with loans that did not pan themselves out. And as a result, people lost their homes, their businesses, and so much more. And so we ended up having a set of rules that was meant to help folks, but actually did not help Black and brown communities. And so what we need is not just sort of this idea that if we overlay a policy, it will help all communities, but a recognition that we need targeted resources. The same way that a policy for folks in Appalachia is not going to be the same thing for a policy for folks in New York City, the same thing is true for different communities from a racial perspective, gender perspective, and elsewhere.
Right. So very helpful to have you on. I hope you'll come back because there's a lot more to talk about here. This is Rashad Robinson. He is from Color of Change. So thank you for being with us. In the meantime, it's time now for First Word News. We go to Mark Crumpton.
David, thank you. Doctors in the UK are warning the country to prepare for a second wave of the coronavirus. In a letter published in the British Medical Journal, doctors say local flare-ups are likely and that there is a real risk of a second wave. The warning comes as British Prime Minister Boris Johnson is lifting lockdown measures imposed in March and urging the public to go out and start spending. New York, New Jersey, and Connecticut are taking steps to make sure the virus outbreak doesn't spike in the region again. The governors announced today they will require visitors from states where the infection rate is climbing to quarantine for 14 days. Hospitalizations are down 85% in New Jersey from an April peak and more than 90% in New York. The states are in the midst of reopening in phases. A federal appeals court has ordered a lower court judge to drop the case against former Trump National Security Advisor Michael Flynn. The judge was examining whether the government's dismissal of the case was a corrupt attempt to help one of the president's allies. The appeals court said that would harm the executive branch's exclusive right to prosecute. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Have you wanted to speak in...
What if the world listened more? Maybe it could become a better place. Because when we really listen, we start to notice things that don't sound quite right. They might not seem obvious at first, but listen closely and they stand out like a sore plum. And the more we listen, the more we learn. Our ears help us find belter solutions. And things can change from this to something a little more like this. The new Honda Jazz is a hybrid. Honda, the power of dreams.
At Halfords, we're here to get you where you want to be. We fit car tyres for over 500,000 customers every year. We could fit yours at one of over 350 garages, or even on your driveway with our mobile experts, which means you can safely hit the road again and surprise that special someone. Happy birthday! From tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
In line with government guidelines, face coverings are now compulsory on public transport. At Asda, you can get a 4-pack of Prima disposable face coverings for £2.80, or a 2-pack of washable face coverings from £2.50. Asda, we're all in this together. Selected stores subject to availability.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, for a brief moment today, Alphabet, the parent of Google, was actually over $1 trillion again. But the markets now are being very disrupted by this news about the COVID-19. Kayla Lentz is here to explain to us what's happening. And I guess my question is tech basically a defensive sector on a day like today?
Well, that's what we've seen really over the past couple weeks, is that investors are no longer interested in those kind of cheaper value areas of the market. Instead, they're going back to those classic virus safe havens like technology stocks like Alphabet, notably also Microsoft, Amazon, Apple, which closed at a record high yesterday. And I would note, too, here, David, that just today you have news from Reuters that the DOJ and some state attorneys general are going to meet on Friday to look at an antitrust probe into Alphabet. Then Politico also reported that the DOJ and states are also eyeing a potential antitrust probe into Apple. And yet on the day, both of those stocks are still outperforming the broader market. Yes, they are down by more than 1.5%, but you're still seeing tech stocks seen as just a bit more insulated from all of the other risks we see going on right now.
Yeah, exactly. You have the antitrust, but thus far, those stocks have not been hit by that very much. It really is a fascinating phenomenon, what's going on with big tech right now. That is Kayla Lentz reporting on the markets on the day when we were down about 3%, more or less, in response to all the news. In response to all the news that's been coming out, we thought that we were out of the woods maybe on COVID-19, but it turns out we were far from it, as Florida has record numbers now. We have the state of New York and Virginia and New Jersey and Connecticut saying, we're going to make you go into quarantine if you come from one of the virus hotspots. And the fact is, there are quite a few virus hotspots. And by the way, over in Germany, they're having their own fair share of trouble as well. They've had to put 500,000 people now back on lockdown because of some flare-ups in some specific spots. So the market's reacting to a COVID-19 virus that doesn't seem to want to go and is not very predictable. In the meantime, right here, President Trump says he wants to reach out to African-American black voters this November. Does he have a chance? We're going to talk with T.W. Shannon. He's the former Oklahoma Speaker of the House of Representatives. That's here on Balance of Power on Bloomberg Television and on radio.
This is the Bloomberg Money Minute. U.S. stocks are falling more than 2.5% on a surge in new coronavirus cases in several states. Investors are concerned that the spike will hamper the economic recovery. The Dow is falling 721 points, Nasdaq dropping 250, S&P 500 down 85. While the world could be in store for an even deeper recession, the International Monetary Fund downgraded its GDP forecast, projecting the global economy will contract by 4.9% this year as the coronavirus lingers. Another retailer is falling victim to COVID-19. Vitamin seller GNC has filed for Chapter 11 bankruptcy. The health and wellness company plans to sell itself and close as many as 1,200 stores. Donna Wilson, Bloomberg Radio.
NJIT, New Jersey Institute of Technology, makes innovation happen. The university helped biomedical engineering professor Tara Alvarez launch a startup that may revolutionize vision therapy.
Our startup through NJIT is called Ocular Motor Technology. We create virtual reality vision therapy in a head-mounted display. So it's gaming, and basically we're sugarcoating the therapy so that children and young adolescents don't even realize they're doing therapy. To accomplish this, we need biomedical engineers, which are here on NJIT campus, computer scientists, artists, people that are into story development, and then we're collaborating with a lot of the large pediatric medical centers. This idea of a startup culture is extremely important to not just NJIT and the National Science Foundation, but also to the U.S. as a societal whole.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Right now, Doctors Without Borders medical teams are operating in some of the most remote and dangerous corners of the world. When front yards become front lines, at the crossroads of conflict and epidemic, where there are no hospitals, that's where we operate. Your response is critical to our response in places where few others will go. That's where we operate. Learn more at doctorswithoutborders.org.
Market upheavals.
The narrative is driven by uncertainty about the virus.
Political reversals.
It's not clear that some of the Republicans up on the Hill are agreed with the Republican White House.
Economic shifts.
The macro clearly being driven by the coronavirus outbreak.
Everything seems to be in motion.
Will it also mean a global recession in your view now?
But here, you're on solid ground.
Looking forward to guiding you through all of this.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
This is Balance of Power on Bloomberg Television and Radio. I'm David West, and the market's having a tough time today, and it's mainly about the coronavirus. We have an uptick in Florida, setting new records down in Florida, a lot of concern down there, particularly around Miami-Dade. We also have New York now saying, together with Connecticut and New Jersey, if you're coming from one of the virus hotspots, and there are plenty of those, you're going to have to go into quarantine for some time because we're not sure that we're entirely safe. We now are joined by our markets reporter. She is Sarah Ponczek, who knows about all this much better than I do. Sarah, give us an update on where the markets are.
So if you look at the major benchmarks today, we're obviously seeing a pretty nasty sell-off. You have the S&P down about 2.6%, the Dow down the same amount, the NASDAQ not falling quite as much, still seeing tech get the benefit of the Dow. However, that is the worry, as you just mentioned, growing second coronavirus wave worries. And we knew that this is what investors were really keeping top of mind. We had seen surveys from the likes of Bank of America, Morgan Stanley, with both fund managers and consumers all saying that this was their top worry. At the same time, over the past couple of weeks or so, really since June 8th, we've seen this tone change in the market, whereas we started to see large cap, mega caps performing the best once again. We've seen cruise lines and airlines on the flip side starting to underperform. So we had started to see these coronavirus worries really seep into the market, even as we had seen the market contain its resiliency. Today, it seems like that dam is finally breaking.
So, Sarah, as we know, the markets are always right. They never make a mistake. So what exactly happened here? Because an awful lot of public health officials were warning about this possibility. Why weren't the markets pricing that in?
It's still very soon. I mean, it was just 2 Thursdays ago that we saw a near 6% decline, and then the market regained its footing and continued. However, whenever we do see the market get spooked, like that Thursday or like today, there is reason to take notice. Like you said, the market is quote-unquote always right. It's a forward-looking mechanism. And if the market is worried today, and it was showing worries over the past 2 weeks, especially after the resiliency that we had seen since March 23rd. I mean, the fastest 50-day rebound on record, there's reason to take notice. There's reason to believe, or at least wonder, whether or not the market is starting to realize that there is reason to believe that the coronavirus might be with us for longer than some had expected, and that may feed into corporate earnings, that may hit the economy, and we may not see an economic rebound come back as quickly as some had hoped.
Okay, thank you so much to Bloomberg's Sarah Ponczek. Let's turn now to the election come November. President Trump last time in 2016 attracted 8% of the black voters, which frankly was only slightly below the normal average for Republican candidates, apart from Barack Obama, at the time of Barack Obama. This year, he said he wants to do better than that. But is that really realistic, given all that's happened with the pandemic and the aftermath of the killing of George Floyd? We are welcomed now by T.W. Shannon. He was the first Oklahoma Speaker of the House of Representatives. So, T.W., thank you so much for being back with us. What about that? Is it realistic for President Trump to do much better than the 8% he did last time, given all that's happened?
Well, it's absolutely realistic. I mean, I think the proof is in the pudding. When you look at what the president has done in terms of the unemployment rate, the lowest in the history of African Americans since before the COVID-19 disaster, or you look at, unemployment as for the country as a whole. I mean, the president has a proven record. When you look at what the president did in terms of criminal justice reform, I think about just this past Father's Day, thousands of African American fathers were at home because of what President Donald Trump did with criminal justice reform. So absolutely, there's a good story to tell. We just got to cut through the fake news media and get it told.
Well, help us cut through that so-called fake news media, TW, and give us a sense of exactly what President Trump has done. It's one thing to grow the overall economy and say blacks and Hispanics will benefit as well. It's another to really target specifically issues with respect to those communities. And let's talk specifically about income and wealth inequality in this country. His tax reform certainly didn't benefit disproportionately the lower paid people, did he?
Well, it actually did. When you think about the wealth gap in this country, actually closed under President Trump. It actually was one of the lowest that it had ever been. And you think in terms of long-term strategy for African-American communities or communities that have been displaced, what we're really talking about is how do we break the cycle of generational poverty? And that really starts with economic opportunity, but also educational opportunity. That's why I was so proud that President Trump has been such an advocate for school choice initiatives. We know many African-American kids and Latino kids are stuck in failing schools, and President Trump has really led the way on opportunities as it relates to school choice. But even more importantly, look at what he's done for HBCU funding. I mean, he increased HBCU funding by 16%, and then he went a step further and annualized it so that presidents of black colleges don't have to come begging Washington, D.C. every year for additional dollars. So I think the proof is in the pudding. When you think long-term about how the life and the really economic opportunity of African Americans has improved and is going to improve over the long term, I don't think there's a president that comes close to President Trump, frankly.
Do you believe that members of the black community understand that and appreciate it? What you've just said, let's assume that's all right. Do they get it such that when they go to the polling place or they mail in their ballot come November, that they'll be more inclined to support President Trump? Do they perceive him as their president?
You know, I can't speak for all of African Americans. I can tell you, I speak to a lot of African Americans every day who are giving it a shot, who are recognizing, listen, we can't continue to do what we've always done. I grew up in a predominantly African American church, and I know on Sunday mornings, you know, before the election, there was always some Democrat candidate who comes in who promises hope and change. And essentially, the community never changes. President Trump, 4 years ago, looked African Americans in the face and said, what do you have to lose? And that's why you saw an increase in African American vote. Actually, the last election, 13%, if I'm not mistaken, of African American men actually voted Republican for the first time, which, again, there's still a long way to go. But I think in the end, as African Americans, as we get closer and we start drawing a contrast to Joe Biden. In fact, where is Joe Biden? I mean, no one has even heard of this guy, heard from him in 80 days. I think when the election, when we really start defining the candidates and people get a chance to see the difference, and you compare the record. I mean, remember, Joe Biden is the same guy who in the 90s was locking up more African Americans than probably any legislator around, declaring that the youth of African Americans were juvenile predators. And so I think when that message gets told, I think even more African Americans are going to recognize that, hey, Donald Trump is a guy that has a real message and a real hope for the African American community.
Part of that message, though, has been really about the protests and what has been done in this country in the aftermath of George Floyd. And let's be frank, going back to before that in Charlottesville, and the message President Trump was sending out, a lot of people took as not particularly supportive of the African-American community. When you go into your church, how do they react to those kinds of statements from the President of the United States?
Well, listen, this is a very turbulent time in American history. I mean, you think about just coming out of a global pandemic, one that, thank goodness, President Trump did what he did by closing off the border and preventing even more deaths. But I think when African Americans are looking at what's happening in the country and the protests, and certainly any of us as an African American, when I saw what happened to George Floyd, my heart went out to him and to other African Americans who have suffered like he did. That's why I appreciate President Trump for putting forth legislation that holds the police departments accountable. And so I think that issue, we certainly have a lot of work to do there in those communities. We know what the issues are. And President Trump has stepped up and said he wants to address them. Now, certainly, when we think about the long-term opportunity for African Americans, it really starts with job opportunities and making sure that we have a fair criminal justice system. And I think President Trump has really started that conversation and led some initiatives to really help in those two areas. And also, as it relates to educational opportunity, again, our HBCUs are critically important. They've been ignored for a decade. And I think there's more work to be done there. But certainly, the president has a message of unity for those who want to obey the law. Protesting is certainly a righteous thing. No one's objecting to protesting. What I believe people are objecting to is violence and the destruction of property. We cannot live in anarchy, and we cannot allow that. We have to have real enforcement of the law, and we've got to have real leadership coming out of Washington, D.C., particularly when you have these Democrat sanctuary cities where there's no leadership coming forward.
So as we look forward to November, we have a couple of conventions, including a Republican convention, after a virtual convention of sorts, coming up. What do you want to hear from President Trump that might appeal to the African-American voter?
Well, again, I hope that we're going to hear about how we're going to return this economy to where it was before the COVID-19 disaster. I mean, when you look at the numbers of how well African Americans were doing as a whole because of the initiatives of the Trump administration, I want to hear that we're going to make America great again, great like it was before the COVID-19 pandemic. I want to hear that there's going to be a message of unity where all Americans feel appreciated, where we're protecting our borders, where we're not allowing people to enter our country illegally. But certainly for those citizens that are here, we've got the greatest economic opportunity, and that we're supporting strong families. I mean, if we really want a great country and we want great cities, and we do, it starts with really great, strong families. And that's what I want to hear from the leadership coming, not just from Washington, D.C., but all up and down the political spectrum, even at the city council level. So many of the cities that we see that are in turmoil, that are, have been led by leftist regimes for generations. I think people are recognizing it's time for a change in those cities, and I think you're going to hear a resounding message from the president during the convention.
So finally, TW, the government has expended trillions of dollars now to try to get the economy back on track. There may be another trillion or more coming. Is it your perception that that has been distributed equitably, or even better perhaps, really disproportionately to help the least fortunate who've been hit the hardest by this pandemic and the economic aftermath?
Well, I'm a banker at Chickasaw Community Bank here in Oklahoma City. I can tell you the PPP program has been a resounding success, particularly for minority businesses and women-owned businesses. I mean, about 40% of all of the loans that we did at my bank were women-owned businesses, and nearly 20% were to minority communities. And so we're seeing it affect and lift all ships, not just particular ones that historically that the big banks just focused on. So yeah, I think it has been equitably distributed. There's certainly more. The need always outweighs the available resource. But at the end of the day, the PPP program was made available in record time. I applaud President Trump for bringing congressional leaders together, signing that bipartisan piece of legislation and getting it across, and then also having his agencies at the Treasury Department and the SBA do their jobs to come up with guidance for banks so that we could get it distributed. And I applaud the community bankers around the country who were the real heroes in making sure that those programs reach where they needed to. So yeah, absolutely. I believe it's been equitable, but certainly more can be done because the need is still great. And we're not completely out of the woods on COVID-19 yet, not until there's a cure or at least an antidote for it. And until then, we certainly are going to need our legislative leaders to work together to provide leadership, but also to recognize that there is not an exception to the Constitution for COVID-19. Personal liberties still reign supreme in the United States of America.
Thank you so much, TW. It's always good to talk with you. That's TW Shannon. He is the former Speaker of the House of Oklahoma. And coming up here, there were some primaries yesterday, also some polls out. We're going to talk with Jeannie Zaino. She's Bloomberg politics contributor and also a professor at Iona College. That's coming up next on Balance of Power on Bloomberg Television and on radio.
Reopenings. Is there a likelihood?
My name is Danya. I moved to Manchester in 2010. I came from Afghanistan. The first school day was a bit tough. I had no friends, couldn't speak English, and felt a bit left out. My high school teacher was very supportive. She matched me up with friends that spoke the same language as me. Having friends gave me a lot of confidence. I felt like I'm not being left out.
Teaching. Every lesson shapes a life. Get free one-to-one support with our teacher training advisors to get one step closer to the classroom. Subject to eligibility. Search Get Into Teaching.
Listen. That's a dream. Everyone has them, jingling away in the back of our minds. And most of the time, that's where dreams stay. So easy to ignore. Anything can drown them out, and everything does. But at Honda, we listen to our dreams. We get right up close. And on really good days, they become reality. From 2022, Honda's mainstream cars will only be hybrid or electric. Honda, the power of dreams.
When you buy tech online and you want to make sure you get exactly what you need, would you rather talk to a robot or to someone called Robert or Sean or Luth or Ange or one of our other tech experts on Shop Live, Curry's PC World's online video call experience?
Hey, it's Ali. Can I give you a hand?
Isn't it nice to get expert advice from another human being before you buy? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
Are you fully informed on the NBA? On the NBA Hangtime podcast, veteran sports writers Sekou Smith and John Schumann analyze the latest NBA news, storylines, and discussions with guests from around the basketball universe.
Isaiah Thomas joined us here on the Hangtime podcast. Isaiah, good morning.
Everybody's doing well. As you know, my daughter tested positive.
Search NBA Hangtime on TuneIn to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Who says only the experts get to do the talking? On the Scuttlepuck NHL Hockey Podcast, irreverent outsiders Mike Bond and Dale Horde give their untrained opinions on all things hockey from the fans' perspective.
I don't know how you get those guys out of there. And Crosby, as great as he's been, it's just such a different era, so it's tough with the... he didn't have the crazy number of points that Orr, Lemieux, and Gretzky did. They just...
Search Scuttlepuck on TuneIn to listen.
Ready for a one-of-a-kind look at the NFL? On the PFF NFL podcast, Steve Palazzolo and Sam Munson interpret the unique stats of Pro Football Focus to analyze the league, uncover secret superstars, and discuss which teams to watch out for in the next Super Bowl.
Let's talk some football. Let's do it, Steve. All sorts of stuff. We're going to do most improved defenses around the NFL. Solomon Wilcots, our very own. He went into some detail over at PFF.com. Most improved defenses around the NFL.
Search PFF NFL on TuneIn to listen.
Hi, this is Mike Tirico, introducing you to Sports Uncovered, the newest podcast series from the storytellers at NBC Sports that will shine a fresh light on the most unforgettable moments in sport.
The reason why I'm smiling, I might get in trouble for this.
Search Sports Uncovered to start listening today.
Stay close to College Hoops Conversation with College Basketball Talk Podcast from NBC Sports. Join Rob Dowster and Bobby Reagan for weekly recaps of what's happening in every conference. Nostalgic flashbacks to classic games and big picture discussions of the future of the sport.
Always knew was a legend, and you always knew was one of the great coaches because everyone always told you how great this coach was, but he never really reached point of either.
Search College Basketball Talk on TuneIn to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
Poll out on the national race between Joe Biden, the former vice president, and President Trump, which didn't seem like very encouraging news for President Trump if it's reliable.
Yeah, really tough news for Trump, and of course it shows Biden with a national lead of 14 points. That follows a Fox News poll out a week or a few days ago showed Biden with a 12-point lead nationally. And, you know, I think the Trump campaign can rightly say that you can't trust and you don't need to look at national polls at this point. But if you dig deep into the poll, in both of these polls, he is losing women, he is losing college educated, he is losing Hispanics, he is losing African Americans. But I think most importantly, he is losing now seniors to Joe Biden. And that is a big problem for Trump. He carried seniors by almost 9 to 10 points in 2016. To have Biden up among 65 and older, but 2 points is a big problem for him. And it's not just the national polls. As we look at the state polls, those are also not looking good. I was just looking at a compilation, and out of the 14 potential swing states, he is only winning narrowly in 4 of those. So Biden is taking 10 of those swing states, if you believe the polls at this point.
So, Jeannie, just even as you've been speaking, we have news crossing the Bloomberg. The Senate Democrats have now blocked the Republicans' police reform bill. Not entirely a shock, but to what extent will this be a big issue come November? This is in the aftermath, obviously, of the tragic killing of George Floyd.
Yeah, I think this is going to be a real issue. It never quite registers, in the most important issue that still tends to be the economy, tends to be jobs. But I do think, given what's gone on in the last month or the last 6 weeks, it's important. It's particularly important, as we saw last night in some of these primary races, where you see the challenger down in Mitch McConnell's seat. He really benefited an awful lot from the work he's done on this issue of policing. So I do think it's going to be a big issue as we go forward. And I think both Democrats and Republicans are going to try to figure out how to speak to their voters. We've already seen President Trump testing out some messages, whether it was in Tulsa over the weekend or in Arizona yesterday, in terms of how to grapple with the sort of momentum on this issue of policing.
So, Jeannie, talking about money, the economy and money, how's the money race going? Because there are reports that while President Trump was way ahead of Joe Biden for quite a while, Joe Biden may be catching up.
Yeah, and Joe Biden, another sort of piece of bad news for the president was that Joe Biden beat him in last month in terms of fundraising. Obviously, the president still has a huge advantage there. But Joe Biden is raising money, and we saw that he had the fundraiser with Barack Obama, which is always a big get. And so I do think that, depending on what the Democrats can do, they are going to have to raise, because the president has an awful lot of money there. And Joe Biden, of course, he is not traveling a lot. He is staying home. But the interesting thing is that he's traveling a bit, but not as much as he normally would. But that still doesn't seem to have impacted his fundraising over the last month. So all this momentum on the left side is really going to help the president there. The vice president there.
Okay. Jeannie, it's always a real treat to have you with us. That's Jeannie Zaino of Iona College, a Bloomberg political contributor, I'm happy to say. Coming up in the next hour, we're going to be going back to Bloomberg Invest, that big summit. We're going to hear, among others, from David Solomon, the head of Goldman Sachs, and also Bridgewater's Bob Prince. That's coming up next hour. This is Balance of Power on Bloomberg Television and Radio.
Gathering world-renowned experts takes effort.
We have the perfect person.
Asking them the right questions takes Carol Masser and Jason Kelly.
Is this possibly early indications of a second wave?
Bloomberg Business Week.
Silicon Valley will be forever changed by this pandemic. What's your take?
Are they paying off their balances?
Weekday afternoons at 2 Eastern.
That is a significant shift.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Okay, kids, Dad's gonna teach you how to dance. First, spread your feet apart. Then, pump your knee, nod your head, shake your hips, and bite your lip ever so slightly. Now, with one hand in the air, point at people with the other hand. I call that the rock star.
Dance like a dad. It's a great way to make a moment with your kids.
Now, make a face like it just smells something bad.
Visit fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We have been watching the markets closely for the entire hour because they have been selling off, apparently on news of the coronavirus spreading in certain states and some precautions taken against it. Kaylee Lyons is here to take us through what we're seeing so far. Kaylee?
Yeah, David, well, we are off the lows of the session, but we're still down 2% or more on all three of the major averages. And I could really point to a number of reasons why this sell-off is happening. You have the fact that valuations really have gotten quite lofty. You have perhaps renewed fears about tensions on trade between the U.S. and Europe. And those were factors that were true when I came into the office this morning. But when we really saw the sell-off steepening is when we started getting headlines about the resurgence in coronavirus cases. First, you had Florida cases rising 5.3% versus the previous 7-day average of just 3.7. Then Houston area intensive care units were said to be at 97% capacity. And then the announcement here in the tri-state area, New York, New Jersey, Connecticut, ordering visitors to quarantine. All of those seems to be rattling investors, shaking kind of the resiliency we've seen in this equity market. Because as we know, the market was looking very, very optimistic that this crisis was nearing its end, that we were reopening, the economy was going to recover more quickly than maybe had been anticipated. And that's really where the rally we've seen come from. But this kind of resurgence in cases may be throwing a little bit of cold water on that thesis, David.
Yeah, and it's one day, and it's actually not even completely the day or the week here. But as a practical matter, a lot of people have been talking about the fact that the markets might be getting ahead of where the economic data are. And in fact, the IMF came out and said just that today. So it raises the question whether the markets were a little bit ahead of where the facts were.
I think that is the exact right question to ask. I mean, you look at valuations on the S&P 500, we're trading at a PE multiple of near 22 times forward earnings expectation. So it's also about that corporate profit outlook. And some of the stocks that we had seen enjoying a real resurgence, the likes of airlines, cruise stocks, energy companies even, for example, all of these stocks that were rallying on the idea that demand was going to come back, that travel was going to pick back up as we reopen. Those are some of the sectors that are the most under pressure today because, again, that narrative, maybe we got a little bit too excited. Maybe that demand recovery isn't going to happen quite so strongly, quite so soon, David.
Exactly right. That's the fear, at least. Thank you so much to Kayla Lyons for that report on the markets, which we will keep our eye on as the day develops. In the meantime, in the next hour, in the second hour of Balance of Power, we'll be on the radio, and really we'll be devoting most of the time to a discussion between David Solomon and John Micklethwaite, our editor-in-chief. David Solomon, of course, is the head of Goldman Sachs. We'll also have the co-CIO of Bridgewater. He is Bob Prince. We'll listen to both of them, among other people. That's coming up on the second hour of Balance of Power on Bloomberg Radio. And this is, after all, Bloomberg.
This is a Bloomberg Pursuits look at luxury. Fifth Avenue just doesn't have the ring it used to have. With the high foot traffic gone and the prime real estate with it, luxury fashion retailer Valentino is now suing to get out of its 15-year lease, arguing it would be struggling long after the pandemic subsides to make the rent. Howard University sued a South Carolina couple to recover a drawing by renowned African-American artist Charles White. The historically black university said the work, Centralia Madonna, valued by Sotheby's at $300,000 to $500,000, disappeared from its collection in the 70s. It only resurfaced in May when Sotheby's contacted the school about the work's provenance ahead of its planned inclusion at an American art auction. Russian tycoon Vitaly Malkin can't prove he owns a $35 million ski chalet in France, but he still has to pay the taxes on it. The case is one of several related to a 3% French levy designed to prevent the wealthy from getting out of paying France's traditional wealth tax via shell companies. I'm Andrew O'Day, Bloomberg Radio. Working from home, Take a little more time for breakfast. Tom Keene.
How will this pandemic change your NASDAQ?
Jonathan Farrow.
When you look at that sector, some of these companies won't exist, will they?
And Lisa Abramowitz.
They've only continued to increase the delinquencies and defaults.
Crunch data topped with fresh world news. Bloomberg Surveillance. Weekday mornings at 7 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. And now, watch us on Bloomberg Television.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Steep losses for the U.S. stock market as investors grow anxious that the resurgence in virus cases in multiple states will hamper the economic recovery. All 11 sectors in the S&P 500 index down by at least 1.6%. Energy and real estate down more than 3% after data showed Florida set another daily record for new cases. Houston, meanwhile, says its intensive care unit beds are at 97% of capacity. Travel stocks and other companies that have been climbing amid reopening optimism got hammered, with New York, New Jersey, and Connecticut now requiring visitors from virus hotspots to self-quarantine. Here's where we stand. S&P lower by 68 points, down 2.2%. Had been down as much as 3.2%. The Dow is now down 595 points, down 2.3%. The Dow at one point was down 859 points. NASDAQ is looking at a 183-point loss for NASDAQ. That's a drop now of 1.8%. 10-year up 7/30 seconds with a yield of 0.68%. Gold is down 0.1%, 17.66 the ounce. West Texas Intermediate crude now down 4.6%, 38.50 a barrel. And with more on the commodities picture on this Wednesday, here's Bloomberg's Renita Young.
Earlier this morning, a resurgence of COVID-19 cases around the world helped push up haven assets like gold. But the strengthening U.S. dollar knocked gold off its highs of the day just as it approached $1,800 an ounce. And WTI crude oil is reacting after an industry report signaled another increase in U.S. crude stockpiles. And easing physical markets are making it hard to sustain a recent rally. Renita Young, Bloomberg Radio.
And right now, an ounce of gold, $17.66. There is evidence the pandemic has yet to dampen the cost of housing. The Federal Housing Finance Agency reports its home price index increased by 0.2% in April. Buyers are facing a scarcity of properties on the market. 102 on Wall Street. That means it is time now for the Market Drivers Report. As always at this time of day, he's got to focus on American depository receipts. Here he is, working from home, Dave Wilson.
Thanks, Charlie. ADRs are falling along with U.S. shares. The S&P ADR index is down 2.3%, and the S&P 500 is lower by 2.2%. Airline ADRs are falling with shares of U.S. carriers as the coronavirus spreads. The UK's Ryanair has lost 5.3%. British Airways owner IAG has dropped 7.8%. Brazil's Azul is down 7.4%, and another Brazilian carrier, Gol, is down 9.3%. Brazil's Cielo has declined 12%. The country's central bank suspended the payment processor's venture with Facebook, which introduced a payment feature to the service WhatsApp earlier this month. That feature has since been suspended as well. Germany's Wirecard has fallen 32%, more than enough to offset yesterday's rally of 36%. German regulators said they suspect the payment processor's revenue and assets were misreported from 2016 through 2018. Wirecard has withdrawn more recent results after $2.1 billion in cash couldn't be found. And Japan's Olympus has risen 5.3%. The electronics maker is selling its digital camera business to the private equity firm Japan Industrial Partners. Terms weren't disclosed. Olympus cited a shrinking camera market as consumers increasingly take photos on smartphones, Charlie.
All right, we thank you very much for that picture of what's happening with American Depository Receipts. Bloomberg's Dave Wilson. Recapping equities lower across the board. Got to keep it locked into Bloomberg Radio throughout the trading day. S&P down 67, down 2.1%. NASDAQ down 178, down 1.8%. The Dow down 589 now, a drop of 2.3%. And of course, find out how Asian markets react tonight. I'm Charlie Pellett. That is a Bloomberg Business Flash.
This is Balance of Power.
Everybody in the world has one common enemy, and that's to win the war against this virus.
The first thing you do is listen to the medical professionals.
Those people that lost their pay, we want to see that pay continued.
Where the world of politics meets the world of business.
Our priority is the health and well-being and the lives of the American people.
We want to make sure that we are continuing to support our hospitals.
We've unleashed our most potent weapon of all, the courage of the American people.
Balance of Power with David Weston on Bloomberg Radio.
One step forward, one step back as governments reconsider reopening plans in light of COVID-19 surges. Polls suggest President Trump has a long climb to the November elections, and the U.S. moves to impose tariffs on imports from the European Union. From New York, welcome to the second hour of Bloomberg Balance of Power. I'm David Weston. The Bloomberg Invest Summit holds its third and final day today, and in a short time we'll be joining for a conversation between David Solomon, head of Goldman Sachs, and our very own editor-in-chief, John Micklethwaite. But first, John Bolton. John Bolton is just the most recent former Trump official to turn on the president, and Bloomberg White House correspondent Josh Wingrove has a piece out today for Bloomberg Opinion saying that this is far from par for the course, as they say. Welcome now. So, Josh, we've had other advisors turn on a president, but not this many and not this strongly, right?
Yeah, I mean, it's just growing ranks, and, you know, among them, former chief of staff, former defense secretary, and in John Bolton's case, former national security advisor. And, you know, it is just remarkable to kind of go through some of the comments that the president's one-time own assistants and secretaries and senior aides have said about him. Bolton, of course, over the last week has said that he doesn't believe Trump is fit for office, that he has no guiding principle, particularly with respect to foreign affairs. You know, we saw James Mattis come out earlier this month, of course, with regards to Trump's response to that protest near the White House. Omarosa, who is an apprentice contestant before she was a White House aide, has called President Trump truly a racist. So, you know, you go down the list, you don't really have to dig into the ranks of Democrats to find critics of the president, but of course his supporters are arguably as fervent as ever.
Yeah, and I think it's an important point you make in the piece. It's not just policy disagreements. It's not just they got overruled on some recommendation made to the president. A lot of it's pretty personal and really goes to competency and character and ability to do his job.
Yeah, and I should mention that is a two-way street. The president's playbook in this is he, in all these cases, or nearly all of them, has just tweeted absolute broadside attacks. Like, take Bolton, for instance, over the last week, he has called John Bolton grossly incompetent, a wacko, a disgruntled old fool, a dope. You know, pick your word. Trump has probably considered it. And, you know, you contrast that, you know, Rex Tillerson is another example of someone who's privately or semi-publicly criticized the president. The president will go from praising someone when he appoints them to really disparaging when they leave. Of course, Mad Dog Mattis is one of those who's now the president now calls our country's most overrated general.
Exactly. Thank you so much to Josh Wingrove. Really appreciate it. He's our White House reporter. Right now, we're going to do what we promised you we'd do. We're going to go to Bloomberg Invest Summit. We're going to hear from David Solomon, head of Goldman Sachs, talking with our editor-in-chief, John Micklethwaite.
There was talk from Goldman about a V-shaped recovery. What do you sort of personally expect?
Well, first, John, thank you for having me, and I'm glad to be here and spend time with you today. I appreciate the opportunity. This crisis has had a profound impact on the economic environment that we're operating in, and the result of that, obviously, was a very, very sharp, steep decline in economic activity as we led into the height of the crisis. And now we're somewhere in the middle, and we're starting to see some economic recovery. My guess is that when you look at the shape of the recovery, the initial shape of it is going to look quite like a V. We had a very, very steep decline, and we are going to have, as we open back up, somewhat of an accelerated recovery. I think the more complicated question, and a hard one really to answer at this point in time, is as you look forward, or you think about what's going to happen over the next 6 to 12 months, how are the effects of this crisis going to have a further impact on the economy going forward? And so a lot of that, I think, is still very uncertain. There's a lot of uncertainty still around the healthcare situation. There's a lot of uncertainty still around human behavior as we're opening up. And so I do think we're going to see a sharp V to start with, but it's very open-ended as to what kind of economic friction we're going to see as we get through the end of the year and into 2021. History would tell you that to fully recover from a shock like this is going to take some time. And so my expectation is while the climb up that we see, in the initial here over the next couple of months will look quite like a V, I think it'll get more challenging and flatten out as we finish out the year and head into 2021. I think it's going to take quite a while for us to get back to where we were before this started.
I know the markets are down a bit today, but are you sort of, they may be back up again, but are you surprised by how robust they've been? I mean, for an economy to go through this sort of shock and with those kind of long-term productions that you're talking about, where there will be, really quite sizable effects going forward, do you think the markets look high? Probably the wrong person to ask, but I'll try.
Well, I'm never going to say the markets look one way or another, because the markets are always smarter than I am at this current moment, at this moment in time. But what I will say, it's not surprising that there's been a flood of money into equities, given what's happened from a monetary policy perspective. The amount of monetary policy and support that's come into markets, the fact that rates are basically at zero. People that have capital to deploy are looking for opportunities to earn a return, and that's pushing money into equities. I would say that, for me, the equity market does seem to be a little bit ahead of my view of the future earnings performance of businesses as we look 6 to 12 months out. And if that's true, and I'm right about that, you'll see a rebalancing of that over time. But there's no question there's been a significant movement of money into equities, which right now, if you're looking to earn a return over some period of time, is the only game in town. I'd also say that the markets are definitely telling us that people are more optimistic, here in the U.S. certainly, about the reopening. I think there's a lot of question and uncertainty just around the course of this. It's clear to me that we have to learn to live with the virus and operate with the virus and do so safely. But the markets are certainly, it seems, discounting the difficulty of that. And that's something we'll just have to watch closely in the months ahead.
I'll come back to how Goldman's reacted to the virus in a second, but just on this issue about the economy generally, you probably talked to as many sort of CEOs as anybody. Is there a sense that there is a worry about credit going forward? Is that people, there must be some companies which have really been turned upside down by this. Some of them had to go running to the government. Do you worry about that? Was that part of your worries about the sort of the slightly longer term future?
Well, sure. If you think about credit's certainly an area where any financial institution that's a significant lender is spending a lot of time thinking about what the impacts would be. At the moment, given monetary policy, which is open markets, large companies certainly have access to capital, and many of them have pulled their financing forward in a way that's allowed them to at least sit securely, knowing that they're well financed as the volatility of the crisis plays out. For smaller enterprises, smaller, medium-sized businesses, that's more complicated. for anyone that's following the banks, as the banks will report at the end of the second quarter, you'll have some clarity as to the forward when people look at the provisioning that's pulled forward in banks' income statements, especially with CECL now pulling expected future losses or modeled losses forward. So there's no question that credit's an area of sensitivity, and depending on the severity of the economic contraction and the path forward, there will be a bigger impact to credit over time. But it's still hard to judge, just as I was saying earlier, because it's really unclear how the recovery will take hold, because there's still a lot of uncertainty around the fundamental issue, which is the health issue and how it affects human behavior, how human behavior affects demand.
Do you think there's a chance of a merger wave as companies think they might be stronger together dealing with this?
Well, there's no question that the number one thing that I think affects merger activity is confidence, CEO confidence, board confidence. And so it wouldn't surprise you that as we went into the height of the crisis at the end of March and April, and this is something we'd have insight into, from our platform, merger dialogue collapsed. And there's no question that's really driven first and foremost by confidence. I think we're now at a point where things are normalizing a little bit, and there's no question that the engagement that we're seeing from CEOs on strategic ideas, strategic possibilities has increased significantly. But as you well know, John, those aren't things that turn on a dime. Those things take time. And so I do think that we will see a slowdown in merger activity in this environment. But I do think there are a lot of very strong platforms that are going to be looking for opportunities to strengthen their position. And then there are certainly people that have interesting businesses that might be under pressure, or a little weaker, or might be more open to those approaches in this environment. So I'd expect a lot of dialogue, but through the summer into the fall, until there's more certainty, I still think broadly at a high level, merger activity levels are going to be more muted.
Do you think more certainty in Asia generally? I mean, you've got places like China, which have had relatively few deaths from the virus. You've got Japan, South Korea, all these countries are reopening and getting things going. I know that bits of America seem to be going a little bit in the opposite direction, and there are still worries in Europe. But is Asia going to lead the way out of this one?
Well, I think Asia is definitely leading the way out. We see it in our own business. If you look at our offices and the way we're operating across Asia, I'd say across Asia we probably have approximately 50% of people in office and increasing. And as I talk to my colleagues in Asia, they talk about a cautious environment in a place like Hong Kong or in Tokyo, but at the same point, they talk about the fact that people are in restaurants, people are living their lives, people are out and about, and they talk about a much more normal operating environment there. Although with caution, people obviously wearing masks, taking appropriate precautions, but the environment there is certainly a meaningful period of time ahead of where we are in Europe, and ahead certainly by an even more meaningful period of time than where we are in the U.S.
And can you tell us a bit about your the idea of how Goldman itself has reacted to this? You just touched on it. Do you think that the business of investment banking, which bits of Goldman do you think will be changed most long term by the virus?
Well, I don't think that I don't think the virus is going to change parts of Goldman long term in a significant way. I do think that the virus has accelerated certain trends around technology and digitization in lots of industries, and certainly financial services will play a part or will touch in that. You asked specifically about the firm and how we responded. I think it's well known. We got about 98% of our employees out of office very, very quickly around the week of the 14th or 15th of March. And we were able, because of planning we had done and work we had done, to operate, remotely, even in our significant trading businesses. And that's really worked quite effectively. And I'd say effectively at the moment, but I wouldn't say it's a long-term solution that's the best solution for us to deliver our services to our clients the way we'd like to. So certainly an environment where everybody's operating remotely, we've made that work quite effectively. But there are things that we lose out on from a collaboration perspective, and even I think an opportunity set perspective, by not having some ability to have people working together more directly in a location-based environment. And so as the crisis broke, I laid out very clearly that we were focused on three things. And I think during a crisis, you really have to think about your communication in very simple, structured ways. I talked first and foremost about how we wanted to take care of our people. We were going to take care of our people, operate a people-first philosophy to make sure people were safe. Second, we had to take care of our clients and continue to operate our business. And third, we had a responsibility to make sure we were helping in communities, because this was first and foremost a human crisis. So with that in mind and people out of office, we went on our way and we've been executing. But as things have progressed in different parts of the world, we'd like to bring people safely, cautiously, appropriately back into office. And we've been doing that, more. We're further along in Asia. We're progressing in Europe and just starting in the United States. So, as I said, in Asia, probably north of 50% and progressing. In continental Europe, probably about 25% in places like Frankfurt or Paris. In London, about 10 to 12%. Here in the U.S., we just started on Monday in New York, and we have about 5% of our people in the New York office. So it actually has been nice for me to be interacting with some people again in this building. I've been coming to work here throughout the crisis, but it's nice to start to see that interaction, and I'm energized and encouraged by it. But for us to really take care of our people and serve our clients well, we're going to be cautious, but we want a bunch of the collaboration and teamwork that comes from having people present to redevelop in some ways. And so we're focused on doing that appropriately.
Do you think that when one looks at a business like Goldman, that many people would have said that you could do things like some relationship management and stuff like that from home, but trading people really needed to be together? Do you think you've discovered how to do that remotely?
Well, we've certainly discovered how to do it remotely, but and while we're doing it remotely and it's working, given the set of circumstances, that doesn't mean it's as optimal as to have people together. So I'll just give you, John, something that's silly. Talking to senior traders, that are operating for us, what happens in this environment is, even though senior traders can pick up things on their turrets, which we basically created for them at home, they also get direct calls on their cell phone. One of the things that happens is when you're by yourself, you don't have the team orientation that if you need to get up from the desk, God forbid you have to go to the bathroom or something like that, and you need 10 minutes, just a personal time. If you're at home and you're by yourself, you feel like if you get up or you step away, you're going to miss something because you don't have the same seamlessness in communication. And so somebody tries, they don't get you right away, they try somebody else at a different firm. And so while we make it work effectively, it's not optimal for everybody. And so there's a balance in this. I think one of the things we've learned is you can be effective, more effective than people imagined, remotely if you've got the right technology and systems backing them. But that doesn't mean it's as optimal as having small clusters of people working collaboratively in the same location where you can enhance the speed of communication.
There's one thing you said earlier about people who work for you. You talked about cutting costs, and then you also talked about keeping when the virus began. You talked about keeping employees, like most of the big banks did, or a lot of them. Has your thinking changed on that at all? Does it mean that sort of if there were to be any job cuts, you would keep those off for another year, or what? How should your employees think about that?
Well, we were very clear, as the crisis started, that at the height of the crisis, we were focused on our employees and we would not be making any layoffs. But we're running a business as we go forward, and part of our business, and we haven't done it this year because it hasn't been appropriate at the time we would normally do it, which would be the end of the first quarter. But we hire between 2,000 and 3,000 people out of school every year, and we also have a process where we always look at kind of the bottom 5% and manage out people so we can bring new, younger talent in. That's part of the way our business model works. And so as we go forward in 2021, 2022, we'll continue with that business model. We have some longer term or medium term goals that we laid out in our investor day where we think there are opportunities to run the firm more efficiently, and we're still committed to those. But obviously the crisis changes the timeline a little bit on some of that. But right now, we're focused on operating the firm. As we go forward, though, we'll do what's right for our shareholders, and we'll do what's right to make sure that we're operating our firm as efficiently and as appropriately to serve our clients as we can.
So those issues would become closer once people are back in the office.
Yeah, I think there's a period of crisis, and then there's a period of normalization. And I do think one of the things that's going to be a drag on the economy broadly, and it's one of the reasons why I think, John, there's going to be a headwind. I think all businesses are learning and seeing ways where there are efficiencies. And I think that's going to have a toll and an adjustment on workforces more broadly as we get into 2021. And that's not something that's specific to financial services. I think it's across industry broadly. And so I do think this is something that as an economy we'll have to manage as we go forward.
Can I ask you about diversity? I looked, and you were amongst the earliest to do that. When you came in, you set these targets. I looked up 11% black and 14% Hispanic, and and also I think 50% women at an entry level. So you came in, and when you did that, you didn't get, I suppose, an enormous amount of credit for it. But now you're probably getting more credit. I wondered what you thought about Wall Street and diversity, and especially race. Why is Wall Street? You could well throw the question at journalists as well, but why is Wall Street not been as good on race? What has been the block there, and why did you seek to change that when you came in?
Well, I got John, very, very focused on diversity and inclusion at Goldman Sachs, broadly before I became the CEO of Goldman Sachs. I saw it. At first, to be honest, some of it was experienced in thinking about gender diversity through my daughters who are in their 20s and their own experience, and really coming to understand how their experience as young women going out into the world professionally was different than mine might have been if I was a young man today, and really starting to understand and doing more listening and understanding of those differences. And so I got focused on this when I was running the investment banking business, and really recognizing that there were opportunities to accelerate and be more purposeful and more aspirational in moving things along more quickly. And so I set goals in the banking division, and I brought that philosophy when I became CEO to try to move the organization forward. And I think it's effective. You have to set aspirational goals. You have to hold people accountable if you want a more diverse and inclusive workforce. And we've been doing that and making progress, but we still have a long way to go. And I'd be the first to say that we at Goldman Sachs have a lot more to do, and we're quite focused on it. I'd say the industry, as you highlight, has a lot more to do, but I'd say so does journalism, and so does industry broadly. And there are fundamental racial equality issues that are deeply rooted in our society. And I think it's a moment in time where leaders like myself need to spend a lot more time listening, trying to understand, and then actually taking steps that in the medium and long term will move us along more quickly and creating more opportunity and more fairness. And it's not just a question of at Goldman Sachs, it's a question of across our society more broadly. And so that's something that I believe in, and something I'm going to continue to try in our own way to make a difference and contribute to. But there's a lot of work to do in improving educational opportunity, and improving economic opportunity, and fundamentally finding ways to make our system more fair. And by the way, when it comes to diversity and inclusion, it's a broad set of issues. Obviously, a lot of focus appropriately on the Black community at the moment, but there's still lots of issues with gender. There are lots of issues with other populations that require additional focus. And we're going to try to do things that we think make a difference. I know you're aware that back in January, we made a statement that we would not take a company public in the U.S. or Europe without one diverse member of the board going to two diverse members of the board in 2021. I'm now seeing that that's having tangible results. You might have seen today that Palantir announced that they've added a diverse board candidate to their board. It's their first diverse board candidate, private company. I'm not sure that would have happened at this moment had we not taken a step. And I'm seeing it across private equity more broadly. Earlier, private companies are starting to bring diversity into their boards, and that's a good, important thing. And so we've got to find ways that with our platforms we can make a difference. But it takes time, it takes commitment, and we can't let this moment pass without staying committed to trying to do more.
Do you think that in some ways Wall Street and indeed society is behind on race? It's slightly more ahead on gender. Gender was something that has Wall Street has been pushing more over the past few years. And is there anything you can learn from that at all?
Well, I do absolutely agree with you that we are behind on race. Society is behind on race, and there are deeply rooted inequalities that exist that come from long-term policies and an awful lot of history that we're going to need to work very purposefully as a society, as a community, to start to reverse, unwind, change, and it's going to take quite some time. I think what I've learned for Goldman Sachs, speaking narrowly for Goldman Sachs, having purposeful goals, creating metrics, creating accountability, shining a light on that, and holding people accountable makes a difference. And while it's slower than we'd like it to be, I don't know any other way to advance the ball other than to be very purposeful, thoughtful, and metriced in your approach. And so that's something we're trying to do, and that's something we've seen in some of the gender work we're doing. But we've been trying for a number of years to apply it more broadly, and while the progress is slow, we are making progress, but a lot more work to do.
I just looked on the internet this morning, and I saw that Jamie Dimon had taken the knee, and it had been a sort of symbolic gesture. Would you do the same thing?
Well, I saw the picture of Jamie. I don't know what the context was, but somebody put the picture in front of me. But I stand with the black community at Goldman Sachs and with the black community more broadly to try to do my small part to listen, to become better educated, to better understand, and given I'm in a position of influence, to try to make a difference to move things forward. And so, my support is going to come from doing what I can do to help advance here. And that starts by trying to have difficult conversations, by doing a lot of listening and trying to learn, to become better educated, because I'm not in those shoes. I don't have the experience of a black colleague at Goldman Sachs or someone who's black in our society. And I need to learn more, listen more, and try to see how I can use my platform to help advance those issues.
Can I ask you a bit about the Goldman business, just to finish on? You made a big push into consumer banking, and I saw in the first quarter you made $282 million in revenue from that, which is still only 3% of overall revenue. Do you have a kind of goal for when you might reach, say, 10%? What's a reasonable standard for somebody like me to come back and ask you in a kind of couple of years' time, have you reached this level?
Well, I think what you can look at, John, if you're interested in understanding the vision we laid out for our consumer business over the next 3 to 5 years, is you can look at our Investor Day presentations, and we laid out a vision to grow the business, broadly, and build an all-digital consumer banking business that took the friction out of financial services for consumers. It's really, really interesting. This is an innovative business platform inside Goldman Sachs that now has over 5 million customers. It has over $70 billion of digital deposits. We've started a credit card that by any standard is the fastest growing new credit card ever. That's a critical mass. It's getting very, very strong reviews from customers on a relative basis to other credit card product in terms of how the product performs and the digital interface. We're building a nice business. If you plop this business, off somewhere else, it would be quite valuable. Inside Goldman Sachs, I think at the moment it's a show me. So we're very committed to it. We think we're going to build a big business over the next decade. I think over the next 3 to 5 years, you'll see a clear impact of the direction that we think we can take this.
We just got a question from the audience saying that you've made some moves into wealth management. Is that something which you want to grow in the same way as the big Swiss banks and various people have really been pushing? Is that something that you see as a big part of Goldman's business going forward?
Well, we have a very big wealth management business. It's a very sizable business inside Goldman Sachs right now, and that wealth management business really has been centered around what I'll call an ultra high net worth wealth management business. And we've started getting into just high net worth wealth management through our ACO platform, which really allows us access to wealth management customers through the corporations that they're involved in, because we provide counseling services, financial planning services to employees in those corporations. We've got a pretty big platform. We have a large asset management business, especially with digitization. It just seemed that there's no reason why we can't have a broader access to the wealth management wallet that's out there, given the infrastructure that we have. And I think one of the things that many of your listeners will understand is the wealth management business is extremely fragmented. We have a very strong position in ultra high net worth wealth management, but in high net worth and also in mass affluent, we think with our brand, with appropriate digital applications, we're in a position where even small share can significantly help us grow that business. So we made an acquisition that expanded the the high net worth wealth management business. United Capital last year. It gives us a broader footprint to expand in that. We're going to continue to look for opportunities to expand the already significant business we have in wealth management.
Do you see any change in the competitive lineup? I was just thinking this morning, I was reading about Goldman. You look at the names which are competing against you. They tend to be, I suppose, irredeemably American, but they're certainly American. You've got JP Morgan, you've got Morgan Stanley. But, 10 years ago, if we talked then, people would have talked about Deutsche and some of the Europeans. And maybe sometime in the future, people are going to talk about companies from Asia. But where do you see the threat coming from if you put the Americans to one side?
Well, it's interesting, that you asked that question right after asking about UBS and Credit Suisse in the wealth management business. Yeah. So, it depends on the business that you're competing in. And, certainly in the asset management business, we compete with firms, from all over the world. In the wealth management business, we compete with firms all over the world. In the, core, what I'll call corporate investment banking business, there's no question that for a variety of reasons coming out of the financial crisis and the resorting, the 5 or 6 large U.S. institutions that compete globally in corporate and investment banking have a much stronger global footprint than many of the European or Asian competitors. I think that there's always competition in any individual situation from competitors all around the world, but the market share and the scope of the footprints, if you look at the top 3 competitors in those businesses at the moment, happen to be U.S. firms. I think it's getting increasingly hard for people that don't have the scale and the global footprints and the access to technology resources to play catch up, but that doesn't mean that they can't have strong regional businesses or at some point in time, compete more broadly globally. But we have lots of competitors in any given situation. There are lots of competitors that compete for that business. And we know we have to show up with great people, great client service, real focus on our clients every day if we want to continue to have strong shares and win in those businesses. And the competition can come from all sides.
Coming to see your predecessor many times, and we would discuss how the world was moving towards a kind of much more kind of global financial world. Now it's getting much harder.
John, I'm sorry, you broke up for a second. Could you just repeat that?
I was asking whether whether financial globalization, which has driven so much of markets, the idea that Goldman could operate all the way around the world fairly seamlessly, whether that is now under threat. You've got differences between America and China. You've got various barriers going up.
Well, I think there's no question that nationalism's on the rise. There are global tensions, particularly, the U.S.-China relationship, but also China's relationship with the developed world more broadly, that are making the world a little bit more complicated to navigate if you're operating globally. That said, some of our businesses are truly global, and I think we'll continue to operate. Some of our businesses are more regionalized. You talked about our consumer business. While we do have a consumer business in the UK, our primary focus is in the US, and I think you would observe that when you look at consumer banking businesses around the world, they're much more regionalized than they are global. So I think there are some businesses broadly that are regionalized, some that are global. I do think that there's a risk of more nationalism, more tension, more friction around the activities of an organization like Goldman Sachs globally, but I don't think it threatens our ability to operate globally. I don't see that in the near term, but I do see more friction. I do think the relationship between the U.S. and China, the relationship between the EU and China, these relationships will be extremely important and an extremely high point of focus for all of us that are operating in markets over the next decade. And depending on how those relationships evolve, they can be a tailwind to growth or a headwind to growth and activity. And I'm cautious. I think it's going to be a bumpy ride. Having nothing to do with COVID, I would have made that comment, before COVID, and COVID obviously is an amplifier.
Do you see the Chinese still being committed to opening up their markets? I remember, I think the first time I met you was at a conference in Beijing, and you sat and saw this pull then that the Chinese seem to be keen to keep on bringing in more of the West, perhaps not giving you as much access as you wanted. But do you think that's still happening?
Well, I think they're moving. I think they're moving. You know, I think you have to watch it. I think some of the stuff with respect to financial services is really linked to stage one of the trade deal, and I think it's moving forward. But the relationship is fragile, and you know, I could see ebbs and flows. But I believe in the long run, there are a lot of reasons why that opening up of financial markets is good, not only for U.S. firms and global firms, but I think it's also good for China. And I think China understands that. And so in navigating the macro political relationship, I still think they're inclined to continue forward in that direction, but we'll have to watch that closely.
Don't you feel somewhat frustrated? I was trying to remember back in my youth, obviously, you know, people from Goldman would come around and try and persuade me that why China should be part of the World Trade Organization. Goldman was one of the great proponents of that. And yet you still haven't got as many licenses as you might want. China does seem to run finance on its own terms.
Well, they certainly have up to this point, and it's not been fair or balanced. And you know, I think one of the things that's very appropriate in the context of what both Democrats and Republicans in Washington have really turned on to is we have to rebalance that relationship, and we have to make sure that things are more fair and equitable than they've been. We had a foreign policy strategy that went back, you know, to the late 1970s, and we're adjusting it now, and I think that's appropriate.
I can leave the last question to one of our audience members who says, how do you view the structure of the markets now that the government is effectively backstopping credit? Does that change the way you view your fixed income platform making money for the next 12 months?
How do I view the structure of markets? Well, there's no question that the monetary policy is having a profound impact on markets. It has, at a moment when it's been, I think, important and appropriate, the Fed has appropriately provided liquidity or a backstop for liquidity that has opened up capital markets so that businesses can access credit. And I think at the moment that's been important. The trajectory of that and how that evolves and how that monetary policy continues to support and what ultimately happens to the economy, that's where we started the conversation, I think is still relatively uncertain. There's no question that a business like ours, our trading business, benefited from higher client activity as the crisis unfolded. These clients were repositioning portfolios and they needed access to liquidity. There's no question that as companies have pulled forward capital raising, we've pulled forward capital raising activity for companies that we might have seen a few quarters out has been pushed into the first and second quarter this year. So, you know, we've seen short-term benefit. I think the more interesting question is trying to guess as to how this will navigate and play out over the next 6 to 12 months. And that's harder to say because there's still a lot of uncertainty.
In the end, last night I interviewed Manny Roman from PIMCO, and you know, we are living in an age of, there's a nice essay in Foreign Affairs about being an age of magical money, where the Fed, where the ECB, all these people are printing vast amounts of money, or certainly providing huge amounts of liquidity. At some point, we have to unwind that, surely.
Surely, and there'll be consequence to that. You know, I think at the moment, given the crisis, I think the Fed, Treasury, you know, the EU, people are responding responsibly to try to support the system at a time that people are very, very effective. This is what government is supposed to do at the time of a universal crisis like this. They're supposed to step in and provide support. But there is consequence to the support. The support is not unlimited. And you can look back at how long it took us to unwind some of what happened during the financial crisis, and that had an impact on muting growth. And so there will be consequence to this, and we'll have to find a way to work through it. I don't think answering that question today is something that we should be primarily focused on. We should be primarily focused on navigating our way through the crisis, but then we will have to focus on the consequences of these actions and the consequences of the hand we were dealt as we move forward.
So from a fixed income point of view, perhaps the sort of starting point is don't bet against the Fed for the moment, but at some point there has to be things like credit and all those things have to come into the picture.
Absolutely. But as you said earlier, you know, with the market, don't bet against the Fed. I think monetary policy around the world is having a big impact on markets. And so, you know, we'll watch how that unfolds. But in the short term, it certainly had a meaningful impact on markets.
It seems very appropriate to end with the markets. But David Solomon, thank you very much for talking to us. That was a wonderful way to begin. I'm going to hand over to my
Okay, we have been listening to David Solomon. He's the CEO of Goldman Sachs in a conversation with John Micklethwaite, the Bloomberg editor-in-chief, covering a wide range of subjects from the markets to diversity on Wall Street to Goldman Sachs business. We're going to continue with Bloomberg Invest Summit in a moment or two with Bob Prince, the co-CIO of Bridgewater. But right now, we need a market check from Charlie Pellet.
Indeed, we certainly do, because we are close to the worst level of the day. Right now, we have got the Dow, the S&P, and NASDAQ all trading lower, with the S&P down 84 points. That represents a drop now of 2.7%. To put that in context, had been down 99 points, lower by 3.2%. The Dow is down 746, down 2.9%. NASDAQ down 230, a drop there of 2.3%. And again, the S&P down 84. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thanks so much, Charlie Pellet. And we want to return now to the Bloomberg Invest virtual summit. And we're going to hear from Bob Prince. He's the co-CIO of Bridgewater, talking with John Farrow.
You know it is over. A couple of months later, I just wonder how you reflected on those comments and whether the policy response really summarized what you were getting at. What are your thoughts on that, Bob? The policy regime we're in right now.
Well, we've certainly transitioned to a new monetary policy regime, and the nature of this cycle is radically different. Even without it, I think we would have been in a different kind of a monetary and business cycle regime. I think the unfortunate thing is, at the time, I don't think any of us were talking about the virus. But when I just to focus in on kind of where we are now and how that monetary policy cycle fits in, I think there are really three key elements to the current set of circumstances. We have a collapse in global income caused by a pandemic with interest rates at zero. And pretty much everything follows from that. This is very much different than a typical economic cycle, because a typical economic cycle is a contraction in credit brought about by a tightening of monetary policy or fiscal policy, which is largely under the control of the central bank. And when things get bad enough, they cut interest rates, they ease monetary policy, and you come back out of it with an expansion of credit. What's happening this time is that we have the collapse in income. The causal influence is the virus. It's the pandemic, and it's the fear of safety. It's basically people staying home and not producing things that's caused a collapse in income, and the collapse in income causes a collapse in spending. So whereas normally you have monetary policy leading that tightening, credit falling, spending falling, and then income being the last thing to fall. In this case, income is the first thing to fall, which is causing a reduction in spending and then all the reactions to that. The driving influence is the virus, which nobody really understands very well, let alone the government responses to the virus, and then the responses of the public to the governments, and very big differences across countries. So there's a huge amount of uncertainty related to the virus as a causal influence. And then to pull out of this, you have zero interest rates. You're also going into this accumulating credit as opposed to reducing credit. So normally in an economic contraction, you're reducing credit, raising interest rates, which gives you a lot of room to cut interest rates and expand credit coming out. In this case, we have zero interest rates, you can't cut them, and credit is expanding, which reduces the potential to pull out of it. So the solution to that problem is actually appropriate, and it's what we refer to as Monetary Policy 3 or MP3. Monetary Policy 1 is really an interest rate driven monetary policy. That's pretty much come to an end when you hit zero. Monetary Policy 2 was the QE driven monetary policy post 2008, where you just buy the assets. But when the risk premiums are already low, there's a lot less potential for that. Monetary Policy 3 is where we are now. And MP3 is the coordination of fiscal policy with monetary policy, where really the biggest actor is the fiscal stimulation, where you can direct the funds to the parts of the economy that most need it, but you support that with monetary policy and the printing of money to buy those bonds so that the interest rates don't go up and reverse the effects that you're trying to achieve. So that's a direct reflection of the fact that we're at zero interest rates, income and income levels are depressed. The actions to date are roughly appropriate. In other words, the amount of printing and the amount of fiscal stimulation has been roughly sufficient to fill the hole in incomes that was created. But not all of that money is getting spent. Let's say 50 cents on the dollar that the government is sending out is actually getting spent. And so actually you haven't had nearly as much of a improvement in spending in the economy as you've had in the liquidity in the system. In addition, the central bank is printing money over and above what it takes to finance those deficits and sending that into all kinds of assets. And so we have a major reflation going on, which has been, by and large, successful so far. The big question about that is that while we're used to thinking in terms of growth rates, which is changes in output over short periods of time, the big thing that's happening now to be thinking about is the collapse in income and the level of income that exists. Because the low level of income that exists will be with us for a while in some substantial degree, which means lower profits, lower spending, and so forth. What also means lower cash flow. And for those that are in, kind of treading on thin ice with respect to their financial position, the longer that this goes on, the more difficult it becomes for them. And so you have these two pressures really operating at the same time. You have the collapse in income, which is collapsing cash flows, which will affect those that are most vulnerable to the collapse in cash flows. And you have the expansion of liquidity by the central bank going into assets, but may not be sufficient to cover those cash flows. And the programs to date are by and large sufficient to cover the income gap for about 3 or 4 months, starting from April. So we're really talking about an amount of money that gets you through the summer. And the problem then is that we're talking about the virus, which has a time frame of probably 18 to 24 months. And so I refer to that as a duration mismatch, essentially the time frame of the virus impact on spending and income in relation to the time frame of how long people can last financially.
So as you pointed out, we've got a duration mismatch. Though, as you can see, up until today, with markets down aggressively, we've had a huge rebound because markets are focused on the liquidity side of the equation, not on the cash flows. Are you saying, Bob, are you anticipating that in the next 3 months, as this Band-Aid that was put on a couple of months ago starts to wear off, that we could hit another air pocket?
Well, you're just going to see an instant replay. Every 3 or 4 months, you'll get the instant replay until governments run out of either the willingness or the ability to cover that gap. And so that becomes a very large uncertainty. And that's also different country by country. The United States is in the best position as a reserve currency, but your typical, emerging economy can't necessarily go to the well over and over and over again. And so that also produces differentiation. So the divergent pressures between the income and cash flow to individuals, companies, and even countries, and the production of liquidity is a force that will create a lot of differentiation in outcomes. Your long duration assets, your storeholds of wealth benefit from the liquidity. But if you're a restaurant that can't get the next loan, right, or maybe you don't want the next loan, that liquidity may not help you. And so those companies and those individuals and those countries which are most exposed to the cash flow impact, they're not storeholds of wealth. They don't get the liquidity. They suffer the most. And so that creates a differentiation of outcomes over time, which will be a really key element of what transpires in the next year or two. And from our standpoint, requires two things. A, it requires diversification. You don't want to be on the wrong side of that. And B, it presents alpha opportunities if you can identify how those differential forces will play out.
Well, let's talk about the divergence right now and define what the wrong side of things actually is. Do you think the market's doing a decent job of discriminating and looking through the things that you identify?
Probably not good enough. I mean, you do see some differentiation, but, if it's like 6-4, but the ultimate outcomes are like 8-2 or 10-0, then no, they're not. And so this is a very unique set of circumstances from a market standpoint, because normally we're all thinking about sort of, is the next move up, is the next move down, and that sort of thing. We're thinking in terms of growth rates. But, if you start from a 20% unemployment rate effectively, and you get a lot of growth and you go to a 15% unemployment rate, that's still a 15% unemployment rate. That's a massive shortage of income that's embedded in the system that you either have to allow to flow through the system or the government has to fill that hole. If you go back to the financial crisis in 2008, the peak unemployment rate was 10%. So if we bounce back from a 20 to a 10, we're just where we were in 2008, and then we're there without the ability to cut interest rates and move forward, and having built up a lot of debts just to cover the income hole that we were in. So I think that the difference in the market, the way the markets will play out versus normal, is this accumulation of a low level of income over a long period of time, which is a much different sort of grinding influence that almost can't be really discounted ahead of time effectively, because you really don't know how long it's going to last. But the longer it lasts, that grinding effect of a lower level of income over a sustained period of time will gradually manifest itself on some parts of the economy in the world, while at the same time the efforts to offset that with liquidity will benefit other parts of particularly the marketplace and to some extent the economy. I'll add one other thing to this, which is that at the end of the day, governments normally get what they want when they try hard enough. So we've gone back to 1800 and studied every financial panic and resulting deleverage or reflation. And in something like 115 out of 125 times across 39 countries, governments got what they wanted. But those getting what they wanted required choices. So, for example, you got four big ways to kind of untangle yourself from a mess. You've got an easing of monetary policy. You've got an easing of fiscal policy. You've got a debt restructuring, and you've got a currency devaluation. And so right now we have the first two. We have the easing of monetary policy and we have the fiscal policy. And it's, an all-out effort on that basis. The question becomes, at what point is that enough? Or do we then transition to debt restructurings and currency devaluations? And from there, what is the status of the dollar as a reserve currency? And then from there, what is the storehold of wealth? And those are the big questions that we're really focused on right now, and also our clients are really thinking a lot about as well.
Bob, these are huge, huge issues. And for everyone tuning in right now, I think they want you to lift the lid on Bridgewater. What are you positioning for? With everything you've just said, all the risks surrounding that, what are you actually positioning for?
Well, I can't go into specific positions, of course, but the I think there are really three big. We've got our normal processes, assessing relative value and so on and so forth, and that's spread across a lot of different markets and very diversified in our positioning. But there are these three big forces will be relevant to probably everybody's positioning, but reflation, storehold of wealth, and differentiation. Those three themes are a good basis for thinking about how to structure a portfolio, whether it's for a strategic asset mix and a diversified asset mix that you hold, or whether it's for a sort of active tactical sort of trading. Reflation, what's a storehold of wealth, and differentiation of outcomes.
Can we talk about what a storehold of wealth is? I remember in January, Ray Dalio, your colleague, partner, and I'm sure good friend as well, made some headlines when he said cash is trash. Given where rates are right now, cash is looking pretty good.
We have been listening to Bob Prince. He's the co-chief investment officer of Bridgewater, in a conversation with John Farrow, going through exactly where he thinks we're going and where we should be positioned for, really saying we have a mismatch between the short-term benefit we're getting from the government stimulus and the longer-term effect of the virus. That does it for Balance of Power for today. I'm David Weston. This is Bloomberg. Thank you for joining us.
Bloomberg Daybreak.
My name is Donya. I moved to Manchester in 2010. I came from Afghanistan. The first school day was a bit tough. I had no friends, couldn't speak English, and felt a bit left out. My high school teacher was very supportive. She matched me up with friends that spoke the same language as me. Having friends gave me a lot of confidence. I felt like I'm not being left out.
Teaching. Every lesson shapes a life. Get free one-to-one support with our teacher training advisors to get one step closer to the classroom. Subject to eligibility. Search Get Into Teaching.
At Honda, we've never looked to other car companies for inspiration. No, it's not a matter of an inflated ego. We just prefer listening to what people really need. For example, the new Honda Jazz Hybrid doesn't have the expected 6 airbags. It has 10, including one that prevents the driver and passenger from colliding with each other. And because we also listen to our conscience, all our safety features come as standard. No charge. Honda, the power of dreams.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
Ready to talk brass tacks on what's happening in Major League Baseball? Turn to the Effectively Wild podcast from Fangraphs for daily statistics, analysis, and commentary.
One team will say, yeah, we're going to keep paying minor leaguers their stipend, and another team will say, we're going to extend the stipend through this month, and then another team will say, nope, we're cutting them off. So are extending it at least through August, which would basically be the end of the minor league regular season.
Search Effectively Wild on TuneIn to listen.
4 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Just going to say, it's one of those days, one of those weeks when you really have to check your calendar to find out what date it is. It is Wednesday, June 24th, 2020. Live from New York and New Jersey. We're both working from home again. I can see where Jason is, back in Alice's bedroom. We're streaming on YouTube. And I got to say, Jason, man, a lot going on. And if you want a theme for today, we've got two. Both are freaking out investors again. It's all about the virus and trade.
Yeah, it absolutely is. And freaking out is not an overstatement in some ways. I mean, this is one of the biggest moves we've seen in quite some time. A move to the downside, at least more than 2%. We're going to get those numbers in just a second. But there is a definitely different tone today. And look, a lot of it is on those virus headlines, you have to think.
Yeah, listen, just look at the most read. Almost all of the stories are virus related. All right, lots to get through over the next 4 hours. Let's get you going, though, on this Wednesday for the check on the trading day. Hey, Charlie Pellet.
Hello there. With a lot of anxiety that the resurgence in virus cases in multiple states will hamper the economic recovery. All 11 sectors in the S&P 500 index down by at least 1.8%. Energy, real estate down more than 3.5%. Data today showing Florida and California set daily records for new cases. Houston says its intensive care unit beds are at 97% for new cases. Also, travel stocks, other companies that have been climbing amid reopening optimism, they are getting hammered today. One more headline relating to all of this. New York, New Jersey, Connecticut now requiring visitors from virus hotspots to self-quarantine. Here's what's going on with the numbers. The S&P is down 86, down now by 2.8%. At the worst level have been down 99, down 3.2%. The Dow now lower by 762, down 2.9%. NASDAQ down 238, lower by 2.4%. 10-years up 10/30 seconds, yield 0.67%. Gold down 0.1%, 17.66 the ounce. And crude, West Texas Intermediate now down 5.9%, 38.01 a barrel. Lots going on. That's the latest And that is a Bloomberg Business Flash.
See, I told you, I don't know what date it is, and Charlie Pellet, you don't even know who you are right now.
He doesn't even know who he is.
All my life, all 29 years, I've been trying to figure out who I am. So
I didn't know you were older than me. Wow. Good to know. Good to know.
Well done. You got it. All right. Charlie Pellet, thank you so much. We'll be catching up with you throughout the show. And this Bloomberg Business Flash was brought to you by Commonwealth Financial Network. For the sixth straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit commonwealth.com to learn more. Carol.
Got to say, my favorite emails have to come from these two following individuals. I'm talking about Vince Signorella and Dave Wilson, man, because they really just know the market so well. So let's set the Business Week agenda on this Wednesday. Vince is with us. He's global macro strategist. He contributes to the Macro Squawk Desk, which is a real-time curated news that's audio streamed directly through your terminal. If you're on the terminal, you know about it. And if you don't, check it out at Squawk Go. He is on the phone from White Plains. And Dave Wilson, of course, all things, too, when it comes to the market. Stocks editor at Bloomberg News. He's on the remote access from New Jersey. So, you know, guys, I kicked off the show. Jason and I kicked off the show. We said there's two main themes. It's virus and trade today. Dave, just quickly set what kind of selling we're seeing today in today's session.
It's pretty much across the board, really. I mean, Charlie Pellet mentioned, how much the 11 main industry groups in the S&P 500 were down. Now it's at least 1.7%. Utility stocks being spared the worst of the declines. Although, interestingly, if you look on the other side of the coin, real estate, think about it, an area affected by interest rates like utilities, right, among the worst performers. It's almost like people are looking and saying, well, this coronavirus, it's going to be an issue for a whole lot of property owners. And think about, people not going back to offices, what happens to storefronts if businesses can't keep going. All these sort of issues front and center.
Right.
Energy stocks, the worst performers on the day. We've certainly seen that movie before. Because they're the worst performers on the year, too.
I just got to
almost everything's down.
Dave, I got to say, we're going to hear more about real estate because Jason had a conversation with Bruce Flatt. So we're going to hear about that from Brookfield. But, Jason, we got to bring in Vince.
We got to bring in Vince because, Vince, I know you're talking to all your buddies on the trading desk. They're obviously not having a great day, or maybe some are if they're short the market. But what are they seeing? What are they weighing here when it comes to virus and trade? Because we've talked with you a lot about China and trade and sort of that global picture.
Well, I'll try to follow that kid Charlie Pellet's act.
Never easy.
Never. I'm going to add another thing for you to worry about, unfortunately. A lot of what has actually happened overnight and going into the morning was actually less the European trade issue and more comments by ECB's chief economist Lane when he suggested that the ECB may be at the end of their rope in terms of helicopter money. He didn't think it helped as much as people thought. And he also mentioned the PEP program, reminding people it was temporary. And when the shock was over, that money was going to be taken away. So when the concept of central banks not contributing, which is what built this risk rally, may be nearing an end, that got traders a little nervous. Certainly the EU trade situation, particularly with Germany, is definitely going to weigh as well. And, of course, as you mentioned, the virus count situation rising in California and Florida, and there are unconfirmed reports on Twitter that we're going to see the same thing happen in Texas later today.
Yeah, well, I don't think that would be a huge shock. We've even had that governor who's been fairly defiant say that we may need to, get back to some of the more stringent stay-at-home and closure-type methods that we've been seeing, Carol.
Yeah, and Vince, I feel like it's a reminder, and Dave has been all over this, of just the market's getting ahead of itself in terms of the enthusiasm about the economy bouncing back. And, the Bloomberg Invest virtual event that's been going on around the world, reminders that nobody really expects a V-shaped recovery.
No, I think that's true. No one is really betting on a V-shaped recovery with the outs, maybe Schwartzman of Blackstone. But what you have been seeing, though, is a nice bounce back in manufacturing. The jobs numbers not as bad as they've been and getting a little bit better. And when you look at these various hotspots, very unlikely we're going to have a trade war with Europe ahead of the election. Very unlikely the ECB is going to be doing anything in terms of pulling back money. I think that was just Lane being just circumspect and just, trying to make people aware that nothing is forever.
Right.
And then even a little bit of a bright spot, perhaps, on the virus count.
Yeah.
Sometimes when we've seen a big daily surge, the next day is not so bad.
Yeah.
So
good point.
Fingers crossed that'll be the case.
Fingers crossed, toes crossed, knees crossed, everything's crossed. I'm just going to say.
We need it to go a different direction. All right. Vincent Signorello, thank you so much. Global macro strategist for the Macro Squawk Desk, joining us on the phone. Dave Wilson, stocks editor. He'll be back with his chart and stock of the day. We got a lot to get to over the next few hours, Carol.
And we're going to stay on the virus because it is on everyone's mind again and impacting trading. We've got the dean of the Stanford University School of Medicine along with the president and CEO of Stanford Healthcare. So, man, they are on the front line, so we'll hear what they have to say. And then Bloomberg Live, you had another amazing conversation, Jason.
Yeah, Bruce Flatt, he was in London. It was interesting to hear him talk about the global effect on this. Also, getting back to work, what that's going to look like. And speaking of big investors, Steve Paliuca is going to be back with us. He owns the Boston Celtics. We love sports, but he's also been very involved in reopening Massachusetts. And I've spent some time talking to him about this. He has got some takes, and you're going to want to hear it.
He's such a real person too, right?
Yeah.
We both have had conversations, and I really love and he sees so many different aspects of our world. We've also got a recognized thought leader in diversity and inclusion. She spent a decade on Wall Street. We're talking about the president of the Center for Talent Innovation. She's going to join us as well.
All right. So all that ahead. In the meantime, let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. Today's number is $20 billion. That's a lot. SoftBank offloaded a huge chunk. It says large. I'm going to say huge.
Mega chunk.
Of its stake in wireless carrier T-Mobile US stake at a discount, cementing a series of transactions that could fetch as much as $20 billion for the Japanese investment giant. The Tokyo-based company raised $14.8 billion from a sale of T-Mobile shares to institutional investors. The company said in a statement it was priced at $103 a piece. That's a 3.9% discount to their record high closing price on Tuesday.
And I think SoftBank just fascinates me. Man, they're just what a kind of pivot that they've had to make in the last year. So
books will be
continue
written.
To track it. Yes. All right, let's get back to World and National News headlines. For that, it's Nancy Lyons in our DC studio. Hey, Nance.
Hey there, Carol. How are you doing today? A federal appeals court has ordered the dismissal of the criminal case against former National Security Advisor Michael Flynn. The U.S. Circuit Court of Appeals for the District of Columbia says the Justice Department's decision to abandon the case settles the matter. Former SDNY prosecutor Venables Khan Nowadays spoke with Bloomberg about the ruling.
In all likelihood, it will be the end. This is a win for the administration. And there's a possibility that this can go en banc, which means all the district court judges will review this decision. But that would take a majority of the judges to actually want to do that.
He says they are not likely to do that. Also today, the order to dismiss the Flynn case comes as the House Judiciary Committee hears testimony on whether the Justice Department has been politicized by Attorney General William Barr. Bloomberg's Irv Chapman has more from Washington.
Assistant U.S. Attorney Aaron Zielinski was one of the prosecutors who resigned from the case against Roger Stone when his recommended sentence was cut.
Roger Stone was treated differently because of politics. And what I heard repeatedly was that this leniency was happening because of Stone's relationship to the president. We were told that we could be fired if we didn't go along.
An antitrust staff lawyer said investigations were launched into marijuana mergers and into the auto industry emissions deal with California after the president weighed in. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
In a world pandemic, wild theories abound.
This is beginning to percolate.
But there is one source that's expert, honest, and current. Bloomberg Surveillance with Tom Keene.
You try to avoid the losers.
Jonathan Farrow.
We've got the potential for the value trap.
And Lisa Abramowitz.
What's the risk for financial stability?
Bloomberg Surveillance. Weekday mornings at 7 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. And now, watch us on Bloomberg Television.
Ladies and gentlemen, we have arrived in Philadelphia. Local time is 3:05 p.m. and the temperature is 67 degrees. At this time, you are now free to use your cellular devices.
You know that feeling when you get to turn your phone on after the plane lands? You can have that feeling every time you drive.
Make sure your cell phone is stowed away whenever you are behind the wheel.
Visit StopTextStopWrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
The world's financial decision makers connect on the Bloomberg Terminal. The buy side and the sell side together, collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at Bloomberg.com/professional.
Hi, it's Olivia Munn with my shelter pets, Frankie and Chance. Say hi, guys. When I adopted them, I discovered that they both have incredible personalities. Chance's sole purpose in life is to love and to be loved. Frankie is a little bit of a scoundrel and always entertaining. They're a little bit of a lot of things, but they're all pure love. Adopt pure love at theshelterpetproject.org. Brought to you by the Ad Council, the Humane Society of the United States, and Maddie's Fund.
Picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Listen, that's a dream. Everyone has them, jingling away in the back of our minds. And most of the time, that's where dreams stay. So easy to ignore. Anything can drown them out, and everything does. But at Honda, we listen to our dreams. We get right up close. And on really good days, they become reality. From 2022, Honda's mainstream cars will only be hybrid or electric. Honda, the power of dreams.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
When the world stopped, people in our local communities didn't. At the Co-op, we want to say thank you to all the local heroes. Daksha wanted to help the NHS, so she and her husband Parish cooked 50 meals for a hospital in Harrow. But they didn't stop there. They've set up the Community Response Kitchen, delivering to hospitals, schools and homeless shelters across London. Now they're delivering between 1,000 and 3,000 meals every day. And they've achieved all this with no funding, just the support of local businesses and local people. To Daksha and Paresh and all the local heroes that keep our communities going, the Co-op says thank you.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything, from current events to untold stories from the golden era of sports.
Neil. You know that, right? I tried to tip dunk off the free throw line one time.
Search Knuckleheads on TuneIn to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Ready to talk brass tacks on what's happening in Major League Baseball? Turn to the Effectively Wild podcast from Fangraphs for daily statistics, analysis, and commentary.
One team will say, yeah, we're going to keep paying minor leaguers their stipend, and another team will say, we're going to extend the stipend through this month, and then another team will say, nope, we're cutting them off. So are extending it at least through August, which would basically be the end of the minor league regular season.
Search Effectively Wild on TuneIn to listen.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Off our session lows, it is a down Wednesday as investors grow anxious that the resurgence in virus cases in many states will hamper the economic recovery. Yields on treasuries fell. The dollar strengthened. Right now we have got the 10-year up 9/30 seconds with a yield of 0.68%. S&P's down 76 at 3,055, a drop of 2.4%. At the worst level, the S&P had been down 99, lower by 3.2%. The Dow is down 666 points, lower by 2.6%. NASDAQ down 210, a drop of 2.1%. Gold down 0.1%, 17.67 the ounce. Crude, major story today, West Texas Intermediate dropping 5.5%, down 2.23 a barrel at 38.14. Recapping, equities lower, S&P down 76, a drop now of 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. And as we've been talking about, as you heard Charlie just speak about, investors, they are perhaps rightly worried about this spike that we're seeing across the country in coronavirus cases, especially in the Sun Belt. This is not a disease we know that summer is going to just sort of take away from us. The numbers are scary. John Tozzi is a healthcare reporter for Bloomberg. He joins us on the phone from Queens. And, you know, John, I grew up in Houston, and so I look at what's going on in that city. I look at Texas, and it's really troubling and a little bit scary. Help us understand where we are, because 2 months after, almost 3 months after we were facing this in New York City, we're back to counting beds again.
Yeah, I mean, I think it's a really concerning situation, as you said, and, you know, not just in Texas, but in a number of states. Arizona, California have recently set records for new cases, and, you know, we are seeing a rise in hospitalizations as well. So, you know, sometimes new cases are just an indication of more testing, but I think there are an increasing number of positive tests and an increasing number of hospitalizations. And, you know, the concern, I think, everywhere is to avoid getting to a point where hospital systems are overwhelmed, that they have, that they don't have enough beds to treat the patients they have coming in.
Right, so much so that, as you put in your story, that late yesterday, the Texas Children's Hospital System in Houston began accepting adult COVID-19 patients because of a surging demand. I do wonder, John, in your reporting, have those states that are now dealing with surges in cases and increasing hospitalization, have they learned anything? Are they better prepared than we were potentially here on the East Coast, where it just kind of, I think, safe to say, no one expected it, to shoot up as much as it did. And I think a lot of people were caught not, unprepared. So I just wonder, are hospital systems across the country better prepared now?
I think there are a lot of variables in play. I think in some ways, yes. Everybody has now had some time to sort of see this coming and, to begin stockpiling personal protective equipment, and medicines, and to kind of really look carefully at their plans around how they are going to create surge capacity if they need to. But there are some other factors that pull in the other direction. In New York, in March and early April, basically everything stopped. People were not getting medical care for non-emergent issues other than COVID. A lot of scheduled care was just canceled for weeks in order to give the hospitals capacity to treat the COVID surge. In most of the country, elective surgeries have resumed, and hospitals are treating patients, who couldn't put up care indefinitely for, really serious issues in some cases. So, they're balancing that as well, along with, the kind of rising number of coronavirus cases.
So being a little bit parochial here, how much do we need to worry in the tri-state area, which is starting to get back to work, where it feels like have been assured along the way that New York and states surrounding would be ready if there was a second wave? What have we learned? What do we need to be worried about, especially because of what happened here before?
Well, I think what the epidemiologists will tell you is that the potential for more spread of the virus exists everywhere, right? Yeah. Because most of the population is still susceptible. So even though, in New York, the number of people testing positive is very low now, and it feels much safer than it did certainly a couple months ago, there's nothing to say that, we won't be in a similar situation to what we're seeing in Texas and Arizona again at some point down the line. And I think, hospital systems everywhere are, considering, what they have to do to prepare for that kind of situation. And, one of the messages I think we're hearing from health officials,
right.
Go ahead.
No. You know what I was just going to say, just to wrap up, is I love the way you wrap up your story. And there's a quote, I believe, from one physician who talks about that even if the health system is as prepared as we can be, if we see the degree of COVID cases and hospitalizations and it keeps growing exponentially, this doctor says, I don't know if even the best preparation in the world would be enough. And it just is once again, Jason, a repeat of, you can prepare, but when those numbers go off the chart, it's really tough to keep up. And that's potentially what we could see again. John, thank you so much. Really appreciate the story and your reporting. John Tozzi, healthcare reporter at Bloomberg News, joining us on the phone in Queens, New York. And Jason, listen, here we are once again. Check out Most Read on the Bloomberg terminal. Yeah. There are, for a while, the virus updates was trending much lower in terms of what everybody was reading on the terminal. It's back up again.
We've been here before. We've seen this movie, and I think we didn't like it the first time, and we like it even less this time. So we're going to keep a close eye on this for sure. Eager to get some time later with the dean of the Stanford Medical School and get his perspective on what they're seeing from a medical perspective. We have leaned heavily on doctors and deans like him to give us a reality check in terms of preparation, but also some prescriptive advice on what we should be thinking about when it comes to work and life and all of it.
I have advice for you, Jason.
Wear a mask.
Yeah, and social distancing.
Yeah.
I'm just going to put it out there. Sorry. Yeah. Sorry for the sarcasm. Large family, grew up on sarcasm. All right, folks.
I'm not even sure it's sarcastic at this point. It's just direct.
You're absolutely right. All right, you're listening to Bloomberg Business Week. I'm Carol Massar, my co-host Jason Kelly. Together we are Bloomberg Radio.
This is a Bloomberg Money Minute. Fears that a resurging coronavirus pandemic could threaten the economy have stocks in a tailspin. The Dow Jones Industrial Average is down 710, the S&P 500 down 81, the Nasdaq down 228. Bayer will pay nearly $11 billion to settle nearly 100,000 lawsuits, which claimed its Roundup weed killer causes cancer. The settlement covers about 75% of all claims. Bayer inherited Roundup in its acquisition of Monsanto. The co-founder and former CEO of CrossFit has sold the fitness company for an undisclosed price. Greg Glassman stepped down this month following an angry response to controversial postings on Twitter. As airlines begin to ramp up service, fare wars may be in the works as they jostle for leisure travelers this fall. The Wall Street Journal reports Southwest this week announced a 3-day sale, including some tickets priced at $39 each way. Larry Kofsky, Bloomberg Radio.
To protect her home and family in a disaster, Karen was willing to wade through water, mud, and insurance paperwork.
Yeah, I can do this.
You go, Karen! By simply understanding and updating what her insurance covers and doesn't cover now, she'll be better prepared no matter when disaster strikes. Learn other simple ways to protect your home and family before a natural disaster at ready.gov. That's ready.gov. A message from FEMA and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
At Honda, we believe in our ears. Listening can help solve some of life's biggest conundrums. For example, if a car breaks down and there's no one around to hear it, does it make a sound? The answer is yes. The new Jazz Hybrid will pinpoint your location automatically and send for help at the tap of a button. And with its personal assistant, you can find the answers to other conundrums like, where is a good vegan gluten-free pizza place with free parking? The new Honda Jazz. Hybrid and connected. Honda. The power of dreams. Connectivity subscription available in selected grades.
Trey Wingo here from ESPN's Golic and Wingo. Every morning, Mike Golic Jr. and I sit down to discuss all the news, drama, and highlights spinning the sports world that day. And with TuneIn, you can hear us whenever and wherever you go. Just search Golic and Wingo and start listening today.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying
to stand out stations and podcasts. Stay in touch with TuneIn.
Looking for your daily fix of NFL news and analysis?
In that. So we had to blow it up with the Super Bowl predictions instead. Because we
Look no further than the Pick Six podcast, where CBS sports writer Will Brinson gets you up to speed with what's trending in the NFL that day, so that you're always in the know.
Yeah, it's pretty revealing of Brince's methodology for predictions. When he gets mad at people for predicting good teams are going to win the Super Bowl or good players are going to win major awards, that's how you wind up.
Search Pick Six on TuneIn to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Stay close to College Hoops Conversation with College Basketball Talk podcast from NBC Sports. Join Rob Dowster and Bobby Reagan for weekly recaps of what's happening in every conference. Nostalgic flashbacks to classic games and big picture discussions of the future of the sport.
Always knew was a legend, and you always knew was one of the great coaches because everyone always told you how great this coach was. But he never really reached point of either.
Search College Basketball Talk on TuneIn to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Indoor gatherings, wash your hands and don't touch your face. Stay at least 6 feet from people you don't live with. Wear a mask. Don't share food, toys, or other items, and avoid shared surfaces. Open windows for better ventilation. Try to avoid gathering indoors as much as possible. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn.
Live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so clearly politics still top of mind, right?
Yeah, it's an election year, Jason Kelly, in case you forgot. And we have...
You're really coming at me hot. I sort of tee something up where I'm clearly agreeing with you, and you're like, yeah.
I got a new pillow, and I slept much better last night.
Good Lord.
You know, for me, it's all about sleep. We're going to talk about the latest polling when it comes to the upcoming presidential election. First up, though, back to your top business stories. Hey, Charlie Pellet.
Well, hello there. And the top business story today is the Wall Street sell-off of the Dow, the S&P, NASDAQ. They're all sharply lower right now. Let's get right to the numbers. I'll give you the why in a moment. Right now, the S&P is down 75. That is a drop of 2.4%. The Dow down 653, down 2.5%. Have been down as many as 859. Have been down as much as 3.3% on the Dow. NASDAQ down an even 200, down by almost 2%. 10-year up 830 seconds. The yield right now 0.68%. Got to keep it locked into Bloomberg Radio right through the close. And, of course, we'll find out how those Asian markets react tonight. Stocks lower as investors grow anxious that the resurgence in virus cases in multiple states will hamper the economic recovery. All 11 sectors in the S&P 500 index sinking at least 1.8%. Energy and real estate down more than 3.5%. Well, certainly adding to the risk-off sentiment is the increase in coronavirus cases in several states. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
We're seeing broad increases in cases across the country, and states continue reopening activities. I heard someone say the other day that we're done with coronavirus, but coronavirus isn't done with us, and I think it's very true. People are going back to business as usual, and it's absolutely not business as usual right now.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. The National Highway Traffic Safety Administration is investigating premature failures of the large central touchscreen and the computer that powers it in Tesla Model S sedans to determine how frequently they break down and whether they pose a safety risk. Shares of Tesla, they are trading lower today, down by 3.5%. The International Monetary Fund has downgraded its outlook for the coronavirus-ravaged world economy, projecting a significantly deeper recession and slower recovery than it anticipated just 2 months ago. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Charlie, thank you so much. Well, among our most read stories on the Bloomberg is this one. It has to do with politics, and it has to do with Joe Biden leading President Trump 50% to 30% in a new nationwide poll. So let's get into this and what it potentially means. We're still a few months out from voting. Bloomberg News national political correspondent Gregory Cordy joins us on the phone from Bethesda, Maryland. Gregory, good to have you here with us. So who did the poll? Tell us what it says and how significant those results are.
This is a pretty respected poll. It's done by the New York Times and Siena College. And it has a pretty decent sample size and margin of error. And it shows Joe Biden leading President Trump by 14 percentage points. That matches the 14-point lead that CNN found earlier this month, the largest lead that we've seen so far this year. It pushes the averages up, and it gives Biden continuing momentum this month. We've seen really the Black Lives Matter movement and the killing of George Floyd in Minneapolis really seems to be now a turning point in this race. People give the President Trump his lowest marks for his handling of race relations, and so this Black Lives Matter event is doing to President Trump what the coronavirus, what the economy, what all these other issues couldn't do, and really pushing his poll numbers down.
Well, and Gregory, what's notable about it, and I think you alluded to this, is that the response and the negative reaction to it is not just coming from Black Americans or people of color, it's coming across the board.
Yeah, it's really all racial groups and all demographics. You see that on this race relations question, but also in these top-line numbers, Joe Biden is leading Donald Trump in almost any demographic group that you can think of. There's one sub-segment of demography that Trump continues to do well in, and that is that non-college educated white vote He's still leading by 14%. And that was really, those were the people who gave Trump the victory in 2016 in those critical states like Pennsylvania and Michigan and Wisconsin, those industrial states, those manufacturing states. Those were a real key voting bloc for him. They're still with him, but the rest of the country seems to be moving away from him.
Which is essentially, it seems like, Gregory, diehard Trump supporters. Is that fair?
Yeah, I mean, Trump's base has always been really solid, and that's one reason why when you look at his approval numbers during his term in office, they really haven't budged much. He's never been above 50%, which is really unusual in the modern history of polling. But he's also never been much below the high 30s or so. He trades in a really narrow band and never goes up too much, never goes down too much. Now we're moving away from using an approval rating to judge the president, and he now has a real head-to-head competitor. It's not a theoretical, a generic competitor on the ballot. It's Joe Biden, and that matchup so far in the polls, Biden looks pretty favorable.
All right, so you teed up perfectly my next question, Gregory, which is, so how much of a temptation is it politically for Biden to just sort of stay as still as he can and not do anything to mess this up?
Yeah, and it's driving the Trump campaign nuts because Joe Biden is really staying within, a half a day's drive of his home in Wilmington, Delaware, not venturing out much. The events that he does do are these virtual events, these online events. He had a fundraiser with former President Barack Obama last night online that raised $11 million. Trump is trying to get out. He went to Tulsa last week with really disappointing results, it has to be said. Trump was in Arizona this week. He's going to the key battleground state of Wisconsin tomorrow. Trump wants to get out there and campaign, but Trump, we saw this in 2016. He needs somebody to campaign against. He needs a villain. He needs a sparring partner. And the Biden strategy seems to be to run his own campaign, to not get baited in to these daily Twitter wars with President Trump. And it was revealing this over the past week or so. President Trump wants to have more debates now with Biden. Which is what you see when a candidate is behind. They always want more debates, and the candidate who's ahead wants fewer.
It's like, no, I'm good. I'm good. All right. Gregory Cordy, thank you so much. National political correspondent for Bloomberg News.
The only thing I will say, and he points it out in his story, national polls don't always predict the outcome, and Trump still has a 50% approval rating on economic issues. That's a big, bright spot, and that's often what determines the outcomes. That's all
Electoral College, folks. Just pointing that out, too. All right. Nancy Lyons down in D.C. She's got world and national headlines. Hey, Nancy.
Hey, Jason. Senate Democrats have blocked the Republican proposal to overhaul U.S. policing practices, contending the measure is too meager to respond to the surge in protest against police brutality. Senate Minority Leader Chuck Schumer says it's not just Democrats who don't like it. He says civil rights groups are also not on board with the GOP plan.
Here's what they say in their letter. We therefore urge you, the senators, to oppose the Justice Act and vote no on the motion to proceed. I dare the leader to come out here and say they're playing politics. Come right out and say it, because it's false.
Well, Senate Majority Leader Mitch McConnell did say it on the Senate floor.
This is political nonsense, elevated to an art form.
A Democratic policing proposal is expected to pass the House tomorrow. A federal prosecutor says an ally of President Trump's was given special treatment by the Justice Department. Aaron Zelinsky, during testimony before the House Judiciary Committee, says he was told that a U.S. attorney was giving Roger Stone favorable treatment because he was afraid of the president.
First, we were pressured to reduce the initial sentencing guidelines calculation for Mr. Stone without any clear legal rationale for doing so. When we refused to go along, we were instructed instead to disregard the guidelines entirely and to recommend an unspecified lower sentence for Mr. Stone.
Well, Stone was convicted on 7 counts, including charges of lying to Congress. He was sentenced to more than 3 years in prison. Attorney General William Barr is slated to appear before the same committee July 28. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This July,
picture this. Small businesses on eBay are
ploughing on, boxing up goods and rolling them out, shipping kettles,
instruments to kids,
art for walls,
treats to pets, shorts for sunny weekends,
to brighten up one British home at a time.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Listen, that's a dream. Everyone has them, jingling away in the back of our minds. And most of the time, that's where dreams stay. So easy to ignore. Anything can drown them out, and everything does. But at Honda, we listen to our dreams. We get right up close. And on really good days, they become reality. From 2022, Honda's mainstream cars will only be hybrid or electric. Honda, the power of dreams.
First, we're told that masks don't work. Then, we're told to wear them all the time. One week, we hear that the mortality rate is 2%. The next, well, who knows? In the time of COVID-19, there is so much uncertainty, and so much scientists are learning in real time, along with the rest of the world. So it's hard to know what you can be sure of and what's still a big question mark. Enter Podcast 19 from 538, where we'll explore the evidence behind the science in our fight against coronavirus. I'm science journalist Anna Rothschild. Each week, I'll investigate coronavirus mysteries, keep track of the latest developments on vaccines and treatments. Oh, and I'll try to edit out all the times I shush my family since I'm recording this thing from the chaos of my home.
Search Podcast 19 to listen today.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying
to standout stations and podcasts. Stay in touch with TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Are you fully informed on the NBA? On the NBA Hangtime podcast, veteran sports writers Sekou Smith and John Schumann analyze the latest NBA news, storylines, and discussions with guests from around the basketball universe.
Isaiah Thomas joined us here on the Hangtime podcast. Isaiah, good morning.
Everybody's doing well. As you know, my daughter tested positive.
Search NBA Hangtime on TuneIn to listen.
Ready for some straight talk on what's happening in the MLB? On the Barstool Sports Podcast starting 9, Dallas Braden and Jared Carrabis cut through the BS to break down the league the way they really see it.
Yeah, we're continuing our little mini-series of college baseball coaches in addition to bringing you major league players from throughout the league. If you've been listening to Starting 9 for some time now, you know that we've had a big leaguer on every single episode for probably 2 years now.
Search Starting 9 on TuneIn to listen.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Steep losses for the U.S. stock market as the coronavirus, threatens the U.S. economy. Investors anxious that the resurgence in virus cases in a number of states will hamper the economic recovery. Here we are. Here's where we stand right now. We've got the S&P 500 index trading lower. The S&P is down 79 points at 3,051, a drop of 2.5%. The Dow is down 287 points, down 2.6%. NASDAQ down 222, lower by 2.2%. 10-year up 9/32 with a yield of 0.68%. Gold is down $3 the ounce, down 0.2%. 17.65 West Texas Intermediate crude down 5.9%. 37.98 a barrel. Recapping, equities lower across the board. S&P down 79, down 2.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Well, thank you, Charlie. Well, today was day 3 of Bloomberg Global Invest.
Event.
Wrapping it up, actually, right now, I believe they're wrapping it up here in the U.S. So it went around the world. It was in Asia, Middle East, Europe, and the United States, obviously. And during the European portion this morning, I got to catch up with Bruce Flatt. You've met him. We've spent some time with him out in L.A. and elsewhere. He's based in New York. He was in London. He's got a global portfolio. They are a massive real estate investor.
Huge.
Massive. Real estate, infrastructure, renewables. We talked about all of it. Check out a portion of this conversation.
I would just say that, leave aside the health impact of everything. The only thing constant in life is change. And we've witnessed from all across the world the closing down of offices and the opening up of offices, and we're virtually opened up all of our offices globally, and we're back up at some offices 100%. In London here, we're probably 65, 70%. New York, we're 25 or 30. So the numbers have been going back up, and it's taken us 3 months. It's been stressful for a lot of people, but the bottom line, this will pass. And this is the crisis of the day, but we'll look back at it. And some small things are going to change, but a lot are going back to where they were. And we'll have another crisis in the future, I'm sure, that'll be just as bad as this one when you're in the middle of it.
So what are those small things that have changed? Because you have a window, literally and figuratively, into how we work. We spend so much of our time at the office. We spend time shopping. You also have a window into that. What are the things that you see that will change in the short to midterm that we should be thinking about?
Yeah, so for offices,